This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Dividend liftoff. Come on, Paul. Share buyback, dividend lift at Microsoft. This is what it's about.
I mean, it's nice. It's a $60 billion buyback. That's nice. It kind of replaces the existing package.
3 years out, do it again.
Yep. So taking up the dividend a little bit, but we're still dividend yield less than 1%. And this is a company, Tom, that's going to throw off $75 to $90 billion in free cash flow for the next couple of years and each year. So they can afford it.
Okay, let's go to the Bloomberg Professional Service with a 25% return on invested capital. That's the WACC screen. The DVD screen, which is a dividend function on the Bloomberg, is outstanding. The dividend's up 62% since the beginning of the pandemic. 62% lift in it. And all in all, shareholder return per year over the last 10 years for Microsoft up 24%
pretty
per
solid.
year. You think they're correlated?
I think they're
so.
doing a good job here, and the stock's up 15% year to date. $3.2 trillion valuation, Tom. How about that?
Use of cash. That'll be one of our themes here. We have an outstanding list of guests today, and we're honored to have Geoffrey Yu in studio with us. We'll get to that in a moment. Right to it from the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we've got green on the screen. Traders looking ahead to a final set of U.S. economic data could determine the size of tomorrow's Federal Reserve interest rate cut. 8:30 Wall Street time. We'll get a read on retail sales for August, followed by industrial production at 9:15. Right now, NASDAQ futures up 0.4%, 89 points. Dow futures up 0.2%, 88 points. S&P futures up 0.2%, 15 points. Two-year yield 3.57%, up 2 basis points. The yield on the 10-year 3.62%. And that is little changed. To commodities, spot gold lower, $2,573 an ounce. We have Brent crude $72, WTI crude $70 a barrel. Shares of Intel up more than 6%. The company said it's going to make custom AI chips for Amazon's AWS. Now, in other news, Intel also postponed new factories in Germany and Poland. Now, meanwhile, a change to the workplace over at Amazon. CEO Andy Jassy ordering workers to return to the office 5 days a week. That's beginning in January. Amazon up about 0.5%. And shares of Microsoft up more than 1%. You heard it here. The company boosted quarterly dividend by 10%, announced a $60 billion buyback plan. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Good morning on your commute. Android Auto, Apple CarPlay as well. Good morning on the corridor. Washington, 99.1 FM, Bloomberg 1130, our flagship in New York City. Good morning from Mount Katahdin to Block Island, 92.9 FM in Boston. See us on YouTube when you get to the office. Subscribe to Bloomberg Podcasts. One of the great things I do when I lecture is I talk about critical thinking skills. These are developed mostly by having a greater sense of correlations and interdependencies between different ideas. Holding the high ground on that from BNY, Geoffrey Yu joins us in studio, usually ensconced in London. Jeff, thrilled to have you in our studios this morning. Way too short. We could do an hour with you this morning.
Thanks so much.
Is the market ahead of the Fed? I've never seen such an ex post, ex ante jumble. Is this constructive for markets to have this communicative uncertainty?
Well, what's constructive for markets might not be as constructive for the Fed. I think there's a bit of a dissonance there. And the Fed's message, whatever it is, not to, so the Fed's priority, responsibility almost, is not to induce panic. And the market should not be goaded into thinking that it can actually drive the Fed in that direction. So I think that's where we need to draw the fine line tomorrow. But ultimately, if you ask me, is pricing a bit too assertive, a bit too erring on the side of a hard landing? Yes, it is, right? So we clearly would be want to be on the other side of that for the time being, and the rest of the world is watching, right? Because in the past, if the US sneezes, the world catches a cold. But looking at how other central banks are behaving right now, I'm not so sure.
Jeffrey, I know I was in your shoes years ago. I know that your sales force is running you all around the United States this week, talking to clients What's your number one message?
So number one message is, well, firstly, from my side of the pond, can a conversation on fiscal happen at some point? It's not like in Europe, the conversations on fiscal are taking place in earnest. And in fairness, it's not like Europe is setting a good example either. But that is the concern because the US is the reserve asset at the end of the day. And the second side is going back to the hard landing conversation. How is the economy actually doing? How's business investment doing? How is how households behaving? I was in Texas yesterday.
There you go.
Yeah, it was my first time there.
Really?
Yeah, and as far as I could tell, again, just speaking from personal experience, clearly a lot going on. Investment, construction, taking advantage, of the state's natural resources in terms of land and the like. So clearly there. Whereas if you look at Europe, if you look at the investment intent going on there, you just highlighted some pulling of investment or lack of investment, going through. So you can see a bit of a divergence. So that begs the question: if there's that much going on in the US right now, why is market pricing on hard landing?
Okay, I'm going to tear up here. I got Geoffrey Yu in Texas.
Yeah,
what do I
can
do
you
with
imagine
that? Where do you go with that? Jeff Yu, what does it then say about productivity differentials? Trudeau's flat on his back after a disaster in Montreal. Germany's flat on its back, et cetera. So I got a labor dynamic, a capital guy dynamic. I got total factor productivity, whatever you want to call it. But how do you overlay productivity on the confidence to be in the markets?
US productivity, right? So if you just do a simple equation, nominal growth, so potential growth, of which productivity is the key factor, plus demographics, plus your inflation target is your terminal rate, right? Just for a bog standard central bank. US productivity warrants, justifies US exceptionalism. That's my message.
Okay, so Chad Jones is at Stanford. He flies over to your London School of Economics. He's got a piece of chalk in his hand. And the bottom line on productivity is America is different. Is it just because we don't believe in austerity with our multi-trillion-dollar budgets?
No, because America believes in its people. America has people, has the talent, and continues to attract that. That is the fundamental difference. Yes, there's a bit of a demographic argument there, but how it fosters productivity through innovation, that's a lesson Europe badly needs to learn. Look at the Office of Budget Responsibilities report. Based on their baseline scenario right now for UK productivity, and this is the power of compounding, right, has UK's debt-to-GDP ratio in 2075 at 270%. If you lower the productivity baseline by 1 percentage point, it goes to 650%. If you increase the productivity baseline by 1%, and the baseline is 1.5, so to 2.5, which probably the US is not far from, then you can keep debt to GDP ratio below 100%. That's what the US has going for it right now.
I call this Stiglitz little g.
Yes.
Stiglitz just screams about growth rate as being the key dynamic.
Jeffrey, what do you tell our good friends in Texas about Europe, Middle East, and Africa in terms of opportunities? What do you tell our friends in Dallas?
Well, Europe right now, it's I'm struggling to get my head around valuations in the currency and the exchange. In the currency and equity markets. I thought the ECB was hawkish last week, to be honest. And look at all the bad news in terms of data on the corporate level, on an aggregate level. Why are you still hawkish? And they can say, well, we don't have a growth mandate. We're different from the Fed. Fair enough, right? But then you should take a step back, look at Draghi's report, how he highlighted competitiveness issues and the like. That really is a message that he's trying to hammer home. Can Europe deal with it? So let's see. In terms of the UK, finally getting to some kind of political normalcy, I would say. But the budget up ahead, again, focusing on growth and productivity. Middle East, to be honest, that over the last few years has been the big change. It's what our clients have been highlighting, where the opportunity is. There is a plan there to boost things. Of course, oil price is very much in focus right now. Clients are looking for proxies, but medium longer term capital flows in the Middle East clearly is benefiting.
Geoffrey Yu on China.
So a lot of clients asking about President Xi's comments last week. They will hit the growth target. Let's just look at simple mathematics, right? So if you look at the growth data for Q1 and Q2 and probably Q3 below the target on an annualized basis, then Q4 has to be strong. We cannot discount that at this point. I think the one thing China, from an asset allocation basis, has going for it is investment relative to benchmark is quite low right now. I think at this point, especially commodities market, less so oil, but maybe industrial commodities, Aussie dollar, you cannot afford to discount the risk of a major boost in Q4. Yes, it's probably a tactical play rather than structural.
We're in the same camp. I mean, I don't editorialize folks, but I'm in the you camp on this. When the facts change, Xi's going to change. I mean, I'm sorry. It's the same old story going back to Zhou and Lei. They can have a strategy, but would you suggest that Beijing will capitulate to realities, allowing FDI, allowing investment?
The recent announcement, allowing foreign investment into healthcare into China, for example, that is a very large market. So you look at the demographics. The premier, ever since he's been appointed, has been stressing the need for FDI and the like, allowing visa-free travel to China for business person, that kind of facilitation. That message is there, but going back to mathematics, capitulation to mathematics, right? Especially if you believe in the growth target, you have to realize reality and accelerate everything.
Geoffrey Yu, thank you so much for joining us.
Thank you. It's a pleasure.
So he hasn't been here since 1784.
No.
That's what Bank of New York goes back to.
Yeah, I know. Number one Wall Street, best address on global Wall Street.
Geoffrey, thank you so much. He is with BNY. Futures up 16. Microsoft with a dividend lift to share buyback. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul Lisa, the man suspected in an apparent assassination attempt targeting Donald Trump, camped outside a Florida golf course with food and a rifle for nearly 12 hours. That's according to court documents filed Monday. 58-year-old Ryan Routh appeared in federal court in West Palm Beach to face firearms charges. Meanwhile, Trump addressed Sunday's apparent assassination attempt, and weeks earlier in Pennsylvania, Trump last night claimed Democratic criticism of him is to blame.
There's a lot of rhetoric going on. A lot of people think that the Democrats, when they talk about threat to democracy and all of this, and it seems that both of these people were radical lefts.
He also suggested he survived because God wants him to be president. The former president spoke with internet personality Farouk Sarmad at Trump's Mar-a-Lago home, broadcast on X Spaces. Iraq's prime minister said U.S. troops are no longer needed in his country because they have largely succeeded in vanquishing ISIS. Bloomberg's Joumanna Bercetche said, down with Iraq's prime minister in Shia, Mohammed Shia Al-Sudani in Baghdad.
ISIS, in their eyes, is no longer a threat anymore. They say that Daesh has mostly been defeated. They're not the force that they once was, and therefore there's less of a justification for the U.S. forces and coalition forces to still be present on the ground. There are around 2,500 U.S. troops and advisors still stationed in Iraq, and he's saying that they want to work towards a more bilateral relationship based on security and diplomacy, as opposed to having the U.S. having an active presence on the ground. And he also hinted that an announcement could be coming soon.
Bloomberg's Joumanna Bercetche sitting down with Iraq's prime minister. A massive pipeline fire that has burned for hours near Houston began after a vehicle struck an above-ground valve after driving through a fence. Officials in Deer Park said that police and local FBI agents have found no evidence of terroristic activity. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney, we've got to look at the Sweeney yield right now. I mean, I'm sorry, it's the major story on this 25-50 beep silliness with the Fed. The two-year yield speaks right near its new lows, 3.57%. The chart's extremely elegant. Just as importantly, the inflation-adjusted 10-year yield this morning is down to new low 10-year real yields to 4 digits. I rarely do this on a Tuesday. It's Tuesday, right?
I think so.
1.5260. That's a wow statistic.
Okay. Yep.
On the 10-year yield. Retail sales today, right?
I know, 8:30.
Like a big deal.
Yeah, we'll break that. We'll see what's happening out there. See how
Does
the
it
consumer's
help
doing.
Does it help with 25 or 50 beeps? I don't think so.
I don't think so. I mean, I think we kind of know where inflation is. I think we know where the labor market is. And
Did you hear in New York last night the sirens stopped?
No.
They were down at Penn Station, and they were looking for some lost contraband. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures on the rise, and this is on the eve of the Fed's first rate cut in more than 4 years. Now, opinion in markets divided between expectations that the Fed will cut by 25 basis points or by 50. Right now, NASDAQ futures up 0.4%. We have Dow futures and S&P futures up 0.2%. The two-year yield, 3.57%. That's up 1 basis point. The yield on the 10-year, 3.62%, and that is little changed. To currencies, the dollar weaker, Japanese yen weaker. Same for the euro, British pound. Bitcoin up nearly 2.5% at 59,000. Companies making news, Starbucks creating a brand leader position. Its new CEO, Brian Niccol, he's looking to revive sales and also restore its coffee house vibes. Shares right now, they are little changed. And then sources say UniCredit set to ask the ECB within days for regulatory permission to build a stake of as much as 30% in Commerce Bank. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo, and that's a Bloomberg Business Flash.
Way down inside, honey, you need it. I'm gonna give you my love. I'm gonna give you my love.
Oh, 1969, 6 years before Liz Ann Saunders was born on this day. Joining us right now, Led Zeppelin girl, Liz Ann Saunders. Liz Ann, happy birthday from all of us at Bloomberg.
I wish I was born in the 70s, but that's not the case. Thank you, Tom. Yeah, this is a big one today.
It's amazing. Well, it's amazing to see, and we're thrilled. And thank you for your support going back to Lou and Wall Street Week and all you've done for America on the equity markets. This is a bull market, Liz Ann Saunders, that's original out of the pandemic. I want you to talk to people who are affected by the gloom events, the Friday weekend gloom. You got to be out of it. You got to time out of it. Speak to people who've missed the bull market.
That's always unfortunate, and I think maybe part of it is just the concentration issue and the misperception that people have that the only way to participate is to have been in or to be in groups like the Magnificent Seven. And it's hard to jump in when you see a small subset like that dominate cap-weighted index performance. But the reality has really been told under the surface. And in fact, this year has been a bit more fraught with turmoil and rotation and churn under the surface than people would think when looking just at the index level. As for instance, the NASDAQ, the average member maximum drawdown within the NASDAQ is almost 45%. I think that has also bred opportunity. And I would say to investors, you don't only have to be in those leadership names. That's an institutional problem for institutions that might be running funds benchmarked against the cap-weighted indexes. Only one of the top 10 best performers in the S&P is in the Magnificent Seven. None of the top 10 best performers in the NASDAQ is in the Magnificent Seven. And I think with the under the surface churn and weakness and turmoil, that has bred opportunity. So I think that's where investors who have missed out on this can look for opportunity is away from those mega cap names.
Are there some sectors, Liz Ann, that kind of screen well for you and your team these days in the expectation of lower interest rates?
Yeah, so we've had financials as an outperform rating for some time. We recently upgraded REIT now to market perform, but it's clearly those interest sensitive areas, and I would throw utilities in there too in terms of what has done well. That's a market perform rating for us. But in the case of utilities and REIT, you've got 100% of the stocks within those sectors now trading above 50-day moving averages. So that's where the breadth improvement has been most significant. In the ever popular technology area, you're only about 50% of stocks that are trading above the 50-day moving average. So there's definitely been a change in character and flavor into those more interest-sensitive sectors. We still, though, have a bit more of a focus on factor decision-making and screening for factors or characteristics as opposed to putting a monolithic lens on any particular sector. And within those factors, we think you still want to stay up in quality, especially around a factor like profitability.
factors like profitability. How do you guys define profitability? Is it EPS? Is it free cash flow? How do you kind of really hone in on that?
Generally, earnings per share on a forward-looking basis. That's at least in terms of the factor of profitability that is embedded within Schwab. And our Schwab equity rating system is factor based. And there's multiple factors associated with that: broad factors, value, growth, stability, sentiment, et cetera. But it's a somewhat traditional forward earnings based profitability factor.
Listen, Saunders, in this day, we celebrate your 49th birthday. We also celebrate what we see from Microsoft. I just got to go back to Liz Ann Saunders a few years back with Lou, talking about use of cash, quality, dividend increase. What do you do with cash? Well, maybe you buy back shares in the modern age as well. I mean, that's the story of the Mag 7, isn't it? They just generate cash.
Yeah, and that's been one of the unique. And by the way, Tom, you keep changing my age lower and lower.
We're working on it.
So I started the broadcast at 60, and I'm apparently back in my 40s now. So I'm reverse aging courtesy of you guys. So thank you very much. This is one of the most unique aspects to this cycle, and the explanation, I think, for why the most aggressive tightening cycle in 40 years has not resulted in the kind of weakness in the economy. There was so much terming out of debt on the corporate side. There certainly was on the mortgage side of things for individuals too, hence the constraints on the existing home market. But you had so many of these mega cap companies have been earning more interest on their cash than they're paying interest on debt. Complete opposite situation for the zombie companies down in an index like the Russell 2000, which is why you've had such a wide performance spread on that zombie versus non-zombie. But that ability to generate interest on that cash really differentiates this cycle from past tightening cycles.
I mean, Paul asks this question every day. Let me steal it from him right now. What happens when the money market rate fund tips at a certain point? There's got to be a behavioral kink where everything changes in our money market fund. Where do those flows go?
Well, I think to some degree you may be seeing it already with some move from the safety of treasuries or money markets into areas like utilities, where you get that dividend yield, but you have the potential kicker on the equity price side of things. So I'm not sure that that's purely something in through the windshield. I think to some degree we've seen a little bit of that movement. And in terms of fund flows, that jumps around. But in the past week, you've actually seen a pretty significant outflow out of U.S. large caps. So there's a lot of money moving around, but I think some of that sort of safety of cash has been finding its way into those interest-sensitive segments of the equity market.
Liz Ann Saunders, thank you so much again. Happy birthday. Birthday greetings from all of us. Look out on Twitter. Her team, all of her team went to Pepperdine. I have no idea.
I didn't know that.
She just recruits out of Pepperdine.
Okay,
that's all
a
there
nice
is.
place to go.
Look for her great charts out on Twitter. Hugely informative, particularly for those scared stiff in this market. Liz Ann Saunders, driving equities chief investment strategist, the Charles Schwab Company, San Francisco. Paul, look at the tape. I mean, Liz Ann was talking about it. Yeah, well, I guess Apple had their hiccup yesterday. They're not going to sell enough iPhones, and then, the news is there, and then you go right back on. NASDAQ up 0.4%, right?
Exactly right. I mean, you got the S&P 500 up 18% year to date here, and you've got, presumably starting tomorrow, Tom, a Fed that's going to be easing interest rates. You've got we had double-digit earnings growth in the most recent quarter. Still looking for some decent growth in the back half of this year. So that's fairly constructive for a lot of investors out there.
Did you tear up last night? Did you see, Liz Ann, did her people, Lisa Mateo, did her people call you last night?
Yes, they found the trophy.
They found the trophy.
Now, was this in Lost and Found at Penn Station?
I went to Penn Station to go back to look for it. I figured, why not?
Yep.
Let's try it. And the guy said, he's like, we have it right here. He kept it because he said he thought it meant something to somebody.
There you go.
Look at that. It meant something to me.
So this was a broadcasting award that...
From the New York State Broadcasters Association,
right.
Yes.
Which you won.
Which I won, and I left at Penn Station, and they kept it.
I've teared up. Can you take us out?
It's amazing.
I know, exactly.
I can't talk, Paul.
Elise Matei, she's a professional broadcaster. We're going to have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures on the rise with U.S. retail data in focus. The Federal Reserve kicks off a two-day meeting on interest rates today. Now, a global survey from Bank of America shows optimism around the Fed's highly anticipated rate cuts. It's boosted investor sentiment for the first time since June. We have NASDAQ futures up 0.4%, 80 points. Dow futures up 0.1%, 78 points. S&P futures up 0.2%, 13 points. The two-year yield at 3.56%. That's up 1 basis point. The yield on the 10-year 3.61%, and that is little change. Stocks on the move. That would be software maker AppLovin. It's up more than 2%. It had an upgrade to buy at UBS on improving revenue growth visibility, and then Solar Edge Technologies down more than 7%. Jefferies cuts it to underperform from hold, pointing to a significant headwinds in Europe. And finally, Viasat down 3.5%. JP Morgan cut its recommendation to neutral, and this is after United Airlines. They chose to partner with Elon Musk's Starlink instead of the broadband satellite provider to power its in-flight Wi-Fi. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Ian Lincoln out with a note here, out yesterday with an extensive note as well. He goes to retail sales, which we see here in 1 hour, and he basically says it may not move the needle. He makes it very clear. The retail sales report, which will help refine estimates for consumption, we suggest it goes beyond the FOMC meeting. We say good morning to all of you on YouTube. Subscribe to Bloomberg Podcasts on your commute. Apple CarPlay, Android Auto. Good morning, 99.1 FM Washington. Bloomberg 11.30 New York. Good morning, 92.9 FM in Boston. Robert Teeter, lean forward here, Chief Investment Strategist at Silvercrest Asset Management. What does the Microsoft dividend lift and share buyback redo signal?
Well, the signal there is that there's a lot of profitability in tech. There's a lot of ways to spread it around. And those are the types of companies that we think can control their own destiny in terms of outcome for stock price. Great earnings, great ability to control margins, great opportunity to return cash to investors.
Do you look at tech is behind the rest of the market or pausing before a redo of strength?
I think it's a pause before a redo of strength. And one of the reasons why is that as we enter what is likely to be a rate cut cycle, but also a relatively slow growth economy, that's a sector that delivers a lot of organic revenue growth and has the opportunity to boost margins. It's one of the few sectors that has profit margins above where they were pre-pandemic, and there's lots of opportunity to continue to boost those margins. So it's an area that has both a revenue opportunity and a cost opportunity.
Paul, you got a run rate revenue growth on Microsoft of at least 13-14%.
Yeah, I think I can.
Per year.
I think I can work with that.
I think 3 years out, that's 14 and 14 is 28. And 38 and 4 is 42. And
compounding.
That's enough math for Tuesday.
That's enough math. And lots of free cash flow, too. Robert, we were talking before we went on the air here. You say you were taking some, you guys were trimming some of your big positions, maybe rotating them into some smaller mid-cap. Talk to us about that. How do you guys come to that kind of decision?
Well, this has been an environment that's been really conducive to the good old classic technique of just simply rebalancing. So we've had a lot of divergence in markets, a lot of sectors that have been up a lot, particularly large cap and large cap growth. And it's been an opportunity to be mindful of taking some gains there, trimming back a little bit, not turning negative on the space, but redirecting some of that to areas that have shrunk in size, particularly small cap, and just keeping that diversified approach. So we think a lot of the opportunity going forward is at the company specific level as companies adjust to this new environment, and important to maintain some balance and diversification there.
What's your allocation to small and mid cap today, and where is it typically? Are you guys maybe underweight or overweight? Because a lot of folks have been talking about trying to find some value in other parts of the market.
Yeah, that's one of those great questions. So, a lot of people benchmark to S&P, so any small cap allocation is overweight. So some of our clients certainly view it that way when we have 10 or 15% in small cap. In another context, that could be deemed to be, sort of around neutral on a market cap perspective overall. So we like that exposure. We do think there's an opportunity there. We think we'll get some rotation as rates start to come down. But again, it's also a very company-specific story. So have to be very mindful of high quality within small cap. There's a lot of bad balance sheets there, a lot of negative earners. But it's a space for some opportunity.
Paul, continue here. Good morning on YouTube. From Mexico City.
No kidding.
And from China.
Hola.
Good morning from China this morning.
There you go.
Good evening.
All right, so privates, alternatives. We were talking about that as well. I'm fascinated with that. How do you guys think about alternatives? What percentage is it of your portfolio today, and kind of where do you like to allocate money to alternative investments?
Yeah, so for some clients it's zero, of course, because we're very careful on liquidity. But for clients who can tolerate that type of illiquidity and longer holding horizon, anywhere from 10 to 20% can be appropriate. And we use that as an offset to both of the traditional pieces of the portfolio. So there are ways to invest in alternatives that are more comparable to fixed income, something that's a little less rate sensitive. So whether that's hedge funds or private credit, something like that. And there are ways to invest that are alternatives to equities. So on the private equity side or venture capital, growth equity, things like that, that give you another way of pursuing those higher returns. So we really view it as two extra tools to approach the higher risk, higher return parts of the portfolio and lower risk, less volatile portions.
Liz Ann Saunders is on, birthday girl. We played Led Zeppelin for her. We're not going to play Led Zeppelin for you, Robert Teeter. But, Liz Ann is saying you have to participate. If I'm scared stiff, how do I participate?
Yeah, that's one of those great questions we've been getting all year as the year has gone on, and it's sort of the classic question of someone that comes in with an all-cash portfolio and says valuations are high and things have run, and what should I do? And our advice is always to tranche that out over a period of time, move in a few segments, and just start to tiptoe in now. We can never get the timing perfectly right. We're pretty constructive on next year, just in terms of an earnings backdrop. We don't think valuations will be boosted much, even with the cut in rates, but we do think earnings will be there next year, and so that's a pretty good opportunity.
Double digit?
Just under double digit in my estimate. I'm at 9% for next year.
I mean, let's review this. Cam Dawson, double digit. Gina Martin Adams. I think you line up 100 people listening, Paul, and they're going to go, "You're nuts." Yeah. Absolutely no way. No. And yet that's what we're hearing. And you're going 9.89%.
I'm around 9%. Consensus I think is 15, and within that I think there's
consensus
a lot.
Consensus is 15%.
So why are you lower? Do you think?
I'm lower because I think within the consensus view, some of the sectors that are very cyclical, analysts are looking for big earnings gains. I just don't see that happening. While we get the rate cut, I don't see the economy accelerating much beyond the 2.5% it's been tracking to now.
All right, so let's assume the Fed starts cutting rates tomorrow, and Bloomberg will have full coverage starting at 1:30 p.m. Wall Street time. How do they go from there? Do they do it like on every meeting, 25 basis points? Do they front load it? How do you think that works? It's been a while.
That's the most important question, and it's so exciting that we have a live meeting for a change. It's all in the communication and guidance. So I don't think there's a whole lot of difference between 25 and 50 basis points here. We're sort of tracking to maybe 60% odds of a 50 basis point cut. But it's all in the communication as to why they're making that cut. So is it tilted more at we've made a lot of progress on inflation? I think that's a hard story to tell when you've had 3 months in a row of 2.6% or so on their preferred metric of PCE. But they have to be careful to not hang too much of that cut on the employment situation, lest some fears start creeping in of recession. And so it's a very difficult communications message. If you just step back and look at, where should they be? Probably 100 basis points lower. And so it's a question of how do they get there?
Yeah. At Silvercrest Asset Management, are you going to force people to go back to work 5 days a week?
Yeah.
Well, we don't force anyone to do anything, but I certainly prefer it, and that's why I'm here. For what it's worth, my team, we require people to go out into the field and meet the fund managers they invest with. We have a lot of in-person team meetings. I'm a big believer in person, but no mandate.
Amazon, they got a mandate, Tom. I mean, if Amazon's doing it.
Fascinating where it's going to end up.
Yeah.
I have no idea. I have absolutely no wisdom.
I've already kind of said, okay, whatever you guys want to do, whatever the marketplace wants is fine, because the world has changed. So
the world has changed.
So that's it. So, Robert, lastly, so again, I think one of the issues a lot of people have is valuation. What's your valuation call in this marketplace here? Are we stretched here, or if I just pull out the Mag 7, I can get comfortable again?
I think we're a little stretched versus history. So we look at 5 components: inflation, interest rates, domestic and global policy, and sentiment. Across those, we think the key drivers going forward to support rates where they are, to support valuations where they are the upcoming decline in rates. So if we just sit here today, valuations look a little stretched. But if we think forward a year ahead, rates are likely to be significantly lower, and that supports where we are in terms of valuation right now. So we're okay with these levels. We certainly don't think they're going higher.
Robert Teeter, thank you so much. Greatly appreciated, Chief Investment Strategist at Silvercrest, particularly their use of cash at Microsoft. If you're just joining us across the nation, Microsoft with a 10% dividend lift and with a substantial share buyback of $60 gazillion as well. You see in the NASDAQ up 0.4%. Levels on futures trading higher than spot market. 5,700 SPX, 42,000 Dow, 19,700 NASDAQ 100. Wow, there's no other way to put it. We're watching the yield space as well, the 2-year yield, 3.56%. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, new details are emerging on the suspect under investigation for the apparent assassination attempt on former President Donald Trump on his West Palm Beach golf course Sunday. According to court documents, the suspect, Ryan Routh, apparently camped outside the golf course with food and a rifle for nearly 12 hours. The former president talked about hearing shots ring out on the golf course during an X Spaces event last night.
I was with an agent, and the agent did a fantastic job. There was no question that we were off that course. I would have loved to have sank that last putt, but we decided, well, let's get out of here.
And in an earlier interview with Fox News, Trump blamed Vice President Kamala Harris's rhetoric for inflaming the would-be gunman, though he didn't provide evidence. Secretary of State Antony Blinken is about to embark on his 10th trip to the Middle East since the Israel-Hamas war began. Bloomberg's Ed Baxter has the story.
That's 10 trips in almost a year, and the plan as it stands is to fly to Cairo to discuss negotiations for a ceasefire in Gaza, as well as some broader regional security issues. It does not appear he will travel to Israel. At the same time, Israel has notified the U.S. through diplomatic channels that it appears the only way left to return the residents of the North to their homes is via military action. That would expand the war. It says it appreciates U.S. support, but must do what's right for the Israeli people. Ed Baxter, Bloomberg Radio.
Hip-hop mogul Sean Diddy Combs was arrested late last night in New York, where he faces a sealed criminal indictment. Combs has faced a stream of allegations by women in recent months who accused him of sexual assault. The charges come from an investigation of Combs that was revealed when Homeland Security agents raided his homes in Los Angeles and Miami in March. Combs' lawyer called the prosecution unfair. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
The good news is I got tickets for the Giants, New Orleans Saints Giants in December. We'll have to see how that goes.
Dear.
The Saints have scored 45 points in 2 games.
Yes.
In your, footballitis with Damian Sassower, did you see this coming where the New Orleans Saints
Not with the Saints.
done?
I didn't. No, I did not see that coming. So, in fact, I had this all backwards. I thought that the Giants would be doing better than what they are now. But who am I?
Paul, I look at the New Orleans Saints, and I don't know anything. All I know is they walk out the field, you can tell it's going to be fun.
Yeah, sure.
They move, they go down the field.
Yep, absolutely. People
There's
like that.
just nothing about it. And
Saints 44-19, Cowboys week 1, 47-10 beating the Panthers in week 2. Now they play
it's
the
like
Eagles
old Seattle Seahawks football.
Exactly.
They score
Throw it all around.
They score under 40 points a game. It's a failure.
Yep.
And
Well, the
unlike
Cowboys,
the Lions, if they score over 10, it's a.
They were disjointed this past Sunday, so I'll leave it at that.
Saints have the Falcons and the Eagles next. That'll be interesting.
Well, the Cowboys also have to get it back together, as what Paul was saying, because they got trounced.
Come on. They're like the Maple Leafs. They've been trying to do that for 30 years. Am I right?
Yeah. But hey, look, Dak Prescott, he got his coin.
Yes,
he's good to go.
2 games in. Is this your worst year for rotisserie football? Is this like, are you starting out strong with the usual grim start?
Oh, I've had some other crummy, snot bubbling years, man, but this one is not good.
This one is not good.
No.
I think a lot of people feel that way. New Orleans Saints, I'm tuned to. I think that's the team I'm going to watch this year. Right. Features up 18 from New York City on YouTube. Subscribe to Bloomberg Podcasts. Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen. This is before the Federal Reserve decides on the size of tomorrow's interest rate cut. Right now we have NASDAQ futures up 0.5%, 103 points. Dow futures up 0.2%, 98 points. We have S&P futures up 0.3%, 18 points. The two-year yield at 3.55%, little change. The yield on the 10-year 3.60%, and that is down 1 basis point. To commodities, the dollar weaker. Japanese yen, euro, British pound stronger. Now, Bitcoin up nearly 2.5% at around 59,000. Few companies making news. Red Lobster, it's emerged from bankruptcy after being acquired by RL Investor Holdings. That's a lender group led by Fortress Investment Group. And LL Flooring, it avoids liquidation, and that's after winning court approval for a sale to private equity firm F9 Investments. And the shares of Walmart traded at an all-time high. Two of its heirs reach a new milestone. Jim and Rob Walton have topped $100 billion each in net worth. That's according to the Bloomberg Billionaires Index. That's a Bloomberg Business Flash. Tom and Paul.
Thanks so much. Rarely do we all get together. We're so busy. Michael and Lisa just killing it at Newsflow, but we gather here as if it is Thanksgiving. Michael Barr, Lisa Mateo, Paul Sweeney, and Tom Keene. And I just love what this woman says about Transit Wine and Liquors at Penn Station. Amazing selection in a small store. Sure. You can also pick up a smaller size bottle, and they give you plastic glasses.
And ice.
And ice. Ice as well.
In there, take it to the train.
So, Lisa, when you left the award behind, is it because you were going to get ice in your plastic
I knew
glass?
there was a tie-in somewhere. There was only one cocktail involved, and that was at the luncheon, and it was just fine. No, it was just like a slip of the mind, you know?
Yep. Mayor
You're
Adams
rushing
is
off
distracted.
and forget it.
I went to the comptroller. I said, what did this cost to retrieve this award? And it's $87,400 or something. Which of our institutions assisted you most in getting back your treasured award?
Thank you to New Jersey Transit and also Amtrak. Yes, they did.
You lost. I didn't know this. You lost the award.
On sabbatical.
I know. I was not. It's not my proudest moment.
She put the award down on the counter. She picked up the little Tito's to go.
and that was off and running.
Oh man!
Where was
it? They found it.
Was this in Penn or Moynihan?
It was in New York Penn. It's in that little waiting area where you wait for New Jersey Transit Amtrak. So I left it there, and then I went back, and the guy said, I have, and he turned, and the blue box was there, and I was like, oh my gosh, and this woman comes over, she's like, congratulations. I'm like, thank you.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Good morning, everyone. Bloomberg Surveillance, daily look at the front pages. The Lisa Mateo Hour, brought to you by Interactive Brokers, their bond marketplace. Access Interactive Brokers' vast selection of over 1 million global fixed income securities, no markups, no built-in spreads, low transparent commissions. Learn more at ibkr.com/bonds. Lisa, what do you have?
Okay, this is Bloomberg Business Week. You have to check this out in the terminal. It came out with its best business school rankings for 2024, 2025, and they look at the areas like compensation, learning, networking, entrepreneurship. Stanford took the top spot for the 6th year in a row. They scored in 4 of the 5 areas they look at. And then you round out the top 5. You have Chicago's Booth School. Then you have Northwestern's Kellogg, Dartmouth's Tuck, and then Virginia's Darden. So that kind of rounds out the whole top for you there.
And each of them different. Each of them different.
Yep. Yeah, and each of them different. And it also, what is interesting, too, in this list that you have to check out, it breaks down which industries are hiring and from which schools, too. So if you're looking out there, consulting hiring the most, and that's followed by financial, technology, healthcare, and consumer. So that's how they break it down, too. So.
Over in Europe, IMD, IESE Business, London Business School in EvercoreisI. Good morning to those in Italy, INSEAD as well.
Yep, great schools.
With some honor there. Bloomberg Business Week with that, and you know, it's a great. It's all it is. It's a great list.
Yeah,
I mean,
always.
77 schools, and
Duke comes in number 12, obviously.
Yeah.
underrated. They should have been in the top 10. I'll
Of
talk
course.
to the powers that
I
be.
think the big, within the competition of this, Harvard's number 6.
Yeah.
Which I think would be the surprise within
Exactly.
our work. Sloan, Carnegie Mellon, I'll get it. 3, 2, 1. Carnegie Mellon, MIT 9 and 10, Duke 12.
Yep.
And on we go. And
Higher than Carolina, though. So
there it is there. Sweeney,
That's
Sweeney
all
will
you
work
care
on that.
about.
Yeah.
Next, what do you got?
All right, we're keeping with education. This one I saw in the Associated Press. It stood out to me because it says students are reading fewer books in English class nowadays. So if you remember
Drives me
how many books
nuts.
we used to read.
Oh,
Yes.
don't
So
get me
here's
going.
what the teachers are doing instead. They're focusing on select passages from the books instead of having kids read the entire book. They're given chapter summaries for every novel that they're assigned, so they sometimes go to that. They're playing the audio books. They're assigning fewer books, more quizzes, but they're saying there's a reason behind the
What's the
madness.
reason? Let
the
me know.
reason, shorter attention spans. Kids can't sit there and read an
Then
entire
you
book.
have to teach them
Yes.
the joy of getting to the back end of
Exactly.
Tale of Two Cities.
Yep.
Yes. Pressure for standardized tests. They said that's it. It's
That's
another
real.
one.
Got that email the other day. Don't get me
Oh,
going.
yeah. Oh, see? And then the sense of they say that short form content is going to prepare them for the digital world. So they need
But not
shorter form.
college. That's the difference.
It's
'Cause
crazy.
let's say they get into Duke. Sweeney was at Duke. It's Friday, and they go, okay, this is the reading this weekend.
Yeah.
Boom. You got to
pages,
read it.
80 pages, 100 pages.
100 pages, and it's 2 different courses. You wake up, you try to get through it, and then you got to figure out what to do with the second book.
Yeah.
That's and they're not. I see it every day.
Yep.
I don't. You're upsetting me, Lisa. What do you got
No,
next?
I got to get you going. That's why I do it. This one's interesting. DraftKings being sued by the MLB Players Union. They're using the names, images of their members without their permission. So this is a lawsuit filed in Philadelphia. So DraftKings, also Bet365, they're also involved. They've been using pictures of these professional players in marketing campaigns. The lawyer said that DraftKings and Bet365, they don't have to do that. They can offer the same type of bets in other sports without using the images. But it's, DraftKings has been expanding the offerings. Last month they acquired website SimpleBet. So it just goes to show you kind of like the different changes that are going on.
And Michael Barr had the story about the sports gaming in New Jersey hitting an all-time record. I mean, this is just, we're at the early innings of all this sports betting, and I don't know where it takes us, quite frankly.
And yet casinos in New Jersey are
Yes.
down.
Right,
But
right.
the
Because you can do it. You can do so much of just from your phone, sitting on your couch.
But you have to link the ratings success right to betting.
Yeah, I think so.
I have to.
Yeah, I think that
I
brings
gotta
in the
tune into
casual
something,
feel.
you know, I agree.
Right.
Next, what do you got?
Okay, this is the last thing. A shift in home ownership in the U.S. More millionaires are choosing to rent instead of buy. They say it's just the lack of suitable homes. The Wall Street Journal, they had analyzed some data, but the millionaires say they'd rather keep their money in cash in the stock market and other investments since home prices, transaction fees are so high. You have property taxes on the rise, and of course insurance premiums where you have those mega mansions on the cliffs, right by the water. So that's some of the reasons. But one guy said he has a 3-bedroom apartment, luxury Manhattan high-rise, $19,000 a month. That's what he'd rather do because he can't find a house.
Yeah,
Absolute sea change.
Yep.
Absolute
Yeah,
sea
it's
change
changing.
going on. I don't know what to make of it other than people look at it and it doesn't work if you're not investing it somewhere else. It's a failed strategy if you're just renting to rent.
Right.
Dead on arrival.
Yep.
But if you're investing as well, everybody's story is different, but you do the math and go from there. Lisa Mateo, thank you for the newspapers as well. Hold on to that award as best you
I
can.
will.
Futures advance. I mean, Sweeney's driving a market higher today, up 0.6.
Yeah, absolutely. Got the S&P, Tom, up about 0.4%. The Nasdaq, as you mentioned, up 0.6%. Looking at the yields here, pretty steady here, Tom. The 10-year Treasury is at 3.6%. Call out the 2-year 3.55%. So we do have a little bit of a, steepening yield curve there after a couple of years of an inverted yield curve. We're starting to get a little bit of a positive bend there. WTI crude oil, that is just fractionally higher, Tom. Still sitting right around that $70 level.
Yeah, oil's been there. We're watching commodities as well. Where's gold this morning? Wow, 26.06 on gold. Extraordinary. In every band, nobody pays attention to the bass player. Let's admit it. I mean, come on, Robert. Liz Ann Saunders called up and said, play something for John Paul Jones. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo as well. Headline here, we've had California dreaming for 10 days? Perfect weather.
Yep.
Finally today, we have a September cloud.
Okay, that's fine.
I think we finally move on from the perfection that we've had. We're going to move on and through the opening here. We got Michael Darda for the next 30 minutes, folks. We want to take every moment of that given the Fed uncertainty. Retail sales in this half hour as well. We'll partition Darda. We'll talk Fed in our first section. In the second section, Michael Darda on investing in America. Good morning on YouTube. Subscribe to Bloomberg Podcast on your commute, Android Auto, Apple CarPlay. Good morning, 99.1, Washington, 1130 AM. New York, huge signal. I didn't realize how 11:30 a.m.
Big one.
It's a ginormous. It's like KMOX.
Yeah, exactly.
St. Louis. It's like
it.
huge. 92.9 FM in Boston. Good morning as well. Let's get right to it from the Interactive Broker Studios. Our Bloomberg Business Flash, Lisa Mateo.
And we've got futures advancing. Traders looking ahead to a final set of U.S. economic data could determine the size of tomorrow's Federal Reserve interest rate cut. In just under a half hour from now, we'll get a read on retail sales for August, and that's followed by industrial production at 9:15 Wall Street time. So we have NASDAQ futures up 0.6%, Dow futures up 0.3%, S&P futures up 0.4%. The 2-year yield at 3.57%, and that's up 1 basis point. The yield on the 10-year 3.61%, and that is little changed. We have spot gold lower, still at $2,580 an ounce. Brent crude at $72 a barrel. WTI crude at $70 a barrel. We have shares of Intel up more than 7%. The company said it's going to make custom AI chips for Amazon's AWS. Now, in other news, Intel also postponed new factories in Germany and in Poland. Now, meanwhile, they have a change in the workplace at Amazon. CEO Andy Jassy ordering workers. They say they have to come back to the office 5 days a week. That's starting in January. Amazon up nearly 1%. And shares of Microsoft, they're up more than 1%. Here, the company boosted its quarterly dividend by 10%, announced a $60 billion buyback plan. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Bloomberg Surveillance. We're brought to you by Cohn Resnick, Advisory Assurance Tax. Is your business future ready? Talk to Cohn Resnick's digital advisory team about strategies and platforms to drive competitive advantage. Our conversation today, we've got a great list of guests. Can't say enough about what's coming up. Ed Hyman in the 9 o'clock hour, Geoff Yu in the 7 o'clock hour, and anchoring our 8 o'clock hour, Michael Darda of Roth. Michael Darda, does anybody at the Fed look at nominal GDP and see the risk here of managing it at 4% or 5%, and they got to get it going with a 50 beep cut?
Well, I certainly hope so, Tom. I mean, obviously, it's implicit within their forecast of real GDP and inflation. But we've had a lot of clients asking us in the last week, what should the Fed do, not just what will they do? And I think any more than 50 basis points is simply unrealistic. And we have certain politicians that really shouldn't be weighing in on monetary policy doing that on both sides. But 50 basis points, I think there is a strong case for simply on these grounds, Tom, and the nominal GDP story is in the backdrop. One is that bond market inflation expectations are now below 2% at the 5-year horizon. Okay, so when the Fed fell way behind the curve, starting to tighten monetary policy in 2022, we were pushing 4% on those long horizon inflation expectations. So the Fed has restored price stability expectations. And that 2% is actually below levels that would be consistent with 2% PCE inflation over time. And those expectations have fallen almost 60 basis points since the spring. So 50 basis points would simply offset and not fully offset the decline in inflation expectations expectations over the last 4 months. It's important to do that because the labor market is losing steam. We can debate recession, non-recession,
Right.
Some rule, the Keene rule. We're losing steam, Tom, and so the Fed risks falling behind the curve here with a drip.
Going up, they were criticism, they were transitory and all that foolishness that we heard. I don't want to get into theory here, Michael Darda, but as a general rule, whether it's neo-Vixelian, neo-Keynesian, whatever the theory, is this a Fed using a theory that just simply hasn't worked post-pandemic?
Well, Tom, I think what the Fed is doing now is simply hyper data dependency, which carries its own risks, right? So the forecasting approach blew up in the Fed's face with the temporary transitory and inflation taking off and staying high for 2.5 years. And so they've sort of receded into this posture where they're just looking at the data. And, that can work as long as you're not at a turning point. The problem with just simply being data dependent is the data is released with a lag and then it gets revised. And when you're at turning points, you tend to get a lot of mixed data. And right now we have mixed data. If you look at GDP, everything looks fine. If you look at payrolls, we're slowing. If you look at the unemployment rate and underemployment rate, it looks like we're in recession. And so from that perspective, hyper data dependency can lead the central bank to behind the curve policies. And, that's really what you want to try to avoid. A more forward-looking approach, I think we could just start with bond market inflation expectations, highly correlated to nominal GDP outcomes in a forward-looking fashion. If we're sub 2% on the 5-year horizon, with this expected path of rate cuts, right? The markets think the policy rate's going to go down to 3% in 2025. And so if that were highly inflationary or way too much, as some are arguing, very unlikely that inflation expectations would be this low. And so the risk in my mind here is that the Fed, is behind the curve and will still be behind the curve even if they do 50 basis points tomorrow.
Michael, up until maybe 7 days, 2 weeks ago, the narrative was for 25 basis point cuts. And if you did a 50, that would suggest, oh boy, something's really wrong with this economy. Now the consensus seems to be, hey, let's just do 50. What's changed over the past 2 weeks?
Yeah, great question, Paul. Look, that was my view too, just reading the tea leaves. I mean, Jackson Hole, Powell kept it very close to the vest. But then we got some comments after the last employment report from Waller and Goolsbee. And in my mind, those comments did not really signal or guide towards 50, but a more flexible approach. And then what happened? We got a bomb from the Wall Street Journal, right? So a very popular writer that covers the Fed, you all know who I'm talking about, wrote an article last week that really started to arouse expectations of a potential 50 basis point cut. And there was another story that dropped last night from the Journal. So, markets are thinking that maybe the Fed is sending a signal here, or at least much more open to starting with 50 rather than 25. And now you have, I'm looking at the WIRP function on Bloomberg, a 71% probability of 50. So now the Fed's got itself in a pickle. If they do less than that, they risk disappointing markets and tightening financial conditions. And if the view of the committee is that they're substantially above neutral, we can debate neutral, but the highest estimates of neutral are about 100 basis points below where the Fed is. And you have markets pricing in a 71% probability of 50, starting with 25, I think, carries significant risks for the Fed.
Okay, after tomorrow, how does the Fed proceed? What's their cadence in terms of bringing rates down, do you think?
That's going to be equally important. So the Fed press conference and the SEP, the Fed's projections, are going to help to shape the expected future path of policy. We know markets now are expecting policy rates to come down to about the 3% level, by say the middle of 2025. And again, you have a lot of people saying, well, that's too much. It's highly inflationary. Not really what the bond market is saying. And so, the Fed with their forward guidance, I think is going to have to be willing to be flexible in the approach here. And I think they will be. The question is, will policy rates fall in a way that's consistent with the Fed getting to neutral and, and preserving the soft landing that's still in place to the extent that there is one. There's still a real debate about that.
Let's come back, Michael. We got to go to break. Michael Barr's just standing there pounding the table, as only Michael Barr can. We'll come back with Michael Darda here and fold this into a view on the equity markets. Futures up 23, NASDAQ up 0.6%, the VIX in fractionally 17.01. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Federal agents in New York City arrested music mogul Sean Diddy Combs. The overnight arrest caps a turbulent year for the rap icon. Last November, his ex-girlfriend, singer Cassie Ventura, filed a lawsuit alleging years of abuse. Combs denies all charges. Former President Donald Trump talked about the second apparent attempt on his life. He talked about it on an X Spaces live stream last night.
All of a sudden, we heard shots being fired in the air. It worked out well, and Secret Service did an excellent job.
Trump spoke during an event promoting a crypto project. Bloomberg's Bill Ferries reports the FBI is looking into the suspect Ryan Routh's social media presence.
He's initially been charged with 2 counts, one being a felon illegally having a weapon, and the other being having a weapon that had its serial number defaced or scratched out. I suspect we'll get a lot more details on additional charges over the next week or two.
Bloomberg's Bill Ferries reports Routh talked about recruiting fighters for Ukraine in his online post, and that's part of the FBI investigation as well. Trump has blamed Kamala Harris's rhetoric for inciting Routh, but he hasn't provided any evidence of that. Meanwhile, a USA Today Suffolk University poll taken after last week's debate shows Harris leading Trump in Pennsylvania by 3 percentage points. That is within the margin of error. Finally, tonight, a partial lunar eclipse of the super harvest moon will take place. Derek Pitts is the chief astronomer at the Franklin Institute in Philadelphia. He says the partial eclipse won't last very long.
Viewers won't begin to see color on the moon until about 10:45 p.m. when it reaches maximum eclipse. But here's the catch. Only a very small portion of the moon is actually going to be in that maximum eclipse.
Astronomer Derek Pitts says the moon will appear bigger and brighter than average because of its proximity to Earth. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. The measurement I used, Paul, with all the data talk is a 10-year real yield.
Yep.
And Michael probably say come in tighter, look at the 5-year real yield. I look at the 10-year real yield. And we have gone from 2.3-ish% down to a new low this morning at 1.5209. So we've gone from 2.3 to 1.5. And there's a large belief out there, as we heard from Mr. Darda, that we get back to 1% real yield.
Wow. Okay.
Wow.
Yep.
Does that save small business? Does that save the investment oomph of America?
I would think that would go a long way towards it, and presumably the mortgage rates, Tom, would track along with that, so people maybe could afford
I think it could be huge.
Yeah.
I mean, you get more, nobody imagines a sub 4% 30-year.
No, but here we are.
Well, here we are. I mean, you start to talk about it at least. We're going to talk with Michael Darda about this and bring it over to the markets, over to futures on the Dow, 42,000. From New York City on YouTube, subscribe to Bloomberg Podcasts. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures advancing, and this is on the eve of the Fed's first rate cut in more than 4 years. Now, opinion in markets divided between expectations that the Fed will cut by 25 basis points or by 50. Right now, NASDAQ futures up 0.5%, 110 points. Dow futures up 0.2%, 114 points. S&P futures up 0.3%, or 20 points. We have the 2-year yield at 3.57%. That's up 2 basis points. The yield on the 10-year 3.61%, and that is little changed. To currencies, we have the dollar weaker, Japanese yen weaker, euro, British pound stronger. We have Bitcoin up nearly 2.5% at around 59,000. Companies making news, Starbucks, it's creating a new position, a brand leader. And this is as CEO Brad Nickel looks to revive sales, restore that coffee house vibe that they had. Shares are a little changed. And then sources say UniCredit set to ask the ECB within days for regulatory permission to build a stake of as much as 30% in Commerce Bank. ADR's up more than 1%. And finally, Meta's Instagram. They unveiled these new settings and features to improve privacy for users under 18. Now, it also plans to stop those notifications for them from 10 p.m. to 7 a.m. so they can get a better night's sleep. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That's a Bloomberg Business Flash.
We got to go to Michael Daugherty here. We can't waste time in this. But I mean, she does this just to aggravate us.
Of course.
Every single story there we could go on about.
Yep.
Michael Daugherty with us. Lisa Mateo, thank you so much. Michael Daugherty with us with Roth on the markets. And there's that word, Michael, ambiguity. We take it from microeconomics and it runs over to the market where if rates are lower, that's good for business, but maybe that also means a slower GDP. Which way does the ambiguity cut here with a new vector of Fed lowering rates?
Well, Tom, it fits perfectly into the previous discussion. So, whether it's bullish or bearish, good or bad, depends on where the equilibrium condition is. So generally, if rates are falling, the economy is losing steam and the neutral rate is going down. So if the Fed lags the neutral rate, then you can still have economic conditions that deteriorate. If the Fed is sort of just on time, then you'll preserve what looks like a soft landing scenario. And if the Fed goes too aggressively and cuts rates too much, which seems to be the primary concern out there from the consensus, it's not our view, then things would reheat, reaccelerate, and and higher inflation would be the risk. So that's really the key question here. Is this future path of Fed policy rates consistent with the survival of a soft landing, or does it mean something else? And the two binary risks would be recession on the one hand, if the Fed is too slow and too late, and a reacceleration and, another bout of inflation if the Fed does too much or moves too soon. I really think the risks are weighted to the former rather than the latter. Just based on what we're seeing from the labor market, a rising unemployment rate, rising underemployment rate, that tells me that if the economy's growing, it's growing below the growth rate of potential. And that's really reinforced by the bond market inflation expectations that have faltered pretty materially in the last 4 or 5 months.
Michael, we're also going to get some later today, some retail sales data. How's the consumer out there, do you think?
Well, I mean, the consumer has been unbelievable. If we look at the broader figures from personal consumption, unfortunately, that's come at the cost of the household savings rate collapsing to 2.9%. So spending has been growing faster than incomes at a time when the labor market is losing steam. And, some are pointing out, well, households, especially the upper income strata, is doing very well because of a high stock market, high real estate prices. The question then is that sustainable? And with the softening labor market and very high risk asset valuations, at least for the large cap stocks that make up the S&P 500, I would say the answer to that is probably no. So I'm worried here that we're going to see consumer weakness in the future. And look, I admit, the consumer has held up much stronger and much better than I thought that it would. But we really have to ask the question about sustainability.
It's just a basic question then. Does this announcement in 12 minutes on retail sales in 10 minutes, does that affect the 25 or 50 beat ballet?
You know, Tom, I don't think so unless it is a huge surprise, right? So these monthly numbers, we had a big surprise to the upside last month, some weak data the month prior. Look at the year-over-year figures. We're sub 3% nominal on retail sales. So that's, well below the historical trend that's, around in the mid fours. And so those year-to-year figures are going to help to smooth out problems with seasonal adjustments. And, so this to me looks like a nominal economy that at best is running at trend and potentially below trend with, the rising unemployment rate, underemployment rate. So whatever these numbers hold for us in the next 9 minutes, I would say it shouldn't really impact the Fed decision on 50 or 25. I think you'd really need a huge surprise with a lot of revision that were going to be the case.
Michael Daugherty, if it's baseball, and we understand in any given cycle, 70% of stocks underperform, 30% do well. Mag 7, witness Microsoft today, seems to have substantial cash. If rates come down, regardless of what nominal or real GDP do, does Mag 7 prosper?
Well, Tom, I've believed this for a while, and it's been wrong so far, but we have exceptionally high valuations on growth stocks right now. So the S&P 500 Infotech Index, if you look at price to sales ratios or forward PE ratios, we are at or above ratios that have ever been seen aside from the tech boom and bubble. Now that went on for a while, right? So, we can continue to see a frenzy play out here, but we really have to ask the question, what happens over a multi-year horizon? And with these valuation levels, I think you could have a substantial drag on the S&P 500 as the Mag 7, and the infotech sector end up sort of petering out here. So from these valuation levels, I think we need to much less optimistic on those areas that have been outperforming and maybe look at underperforming areas. Obviously small cap value, there's some cyclicality there that could be a risk, but for a multi-year horizon, I would look at some of the areas that haven't done as well.
Michael, thank you. Michael Daugherty, generous to be with us in this half hour for retail sales. He's with Roth. Lisa, jump in here as well. Out on YouTube, Paul, live chat. Don't know about you guys, but my local Starbucks locations do not have the square footage to handle more than a small amount of people ordering things with 8 things in them.
Yep.
So I walk out because I just can't get a black cup of coffee. Isn't that what the guys got to do? Make the menu simpler, right?
Yeah, and I think it's just that they've been making the coffee chain smaller because they get the drive-through is a little bit busier. People don't just go in there with their computers anymore and sit and meet with people. That's not happening as much. So they started making them smaller, but they want to get back to that whole coffee house vibe again. So.
Yeah, the Starbucks that I go to down the Jersey Shore, it is a wonderful Starbucks. They run a great store there, but huge drive-through traffic. Huge drive-through traffic. And then the people that are in the store, and it's a very nice store, very spacious. They just come in and get their stuff and leave.
Right.
And very few people just hang. Occasionally you get but it wasn't like it used to be where it really was a congregating area. And I guess that's a trend.
Okay, but Lisa, what do you get when you walk into Starbucks?
I get like the person on YouTube, I get the black coffee. I just go in, they give it to me. I don't have to wait for anything. That's it.
But I get it, but oftentimes I have to wait way too long because they got 3 people behind the counter making some mocha coffee. I don't know. They cost $7. That's what I see it on my.
I see it on my Apple Pay from my child.
Yes,
Apple
exactly.
Pay.
Yes.
There's your Starbucks review of the day. Thank you for that out on YouTube live chat. Love that. Good morning to all of you out on YouTube. Good morning on your commute across this nation. Android Auto. Should mention Sirius.
Yeah.
I don't get serious about Sirius, but I should get serious.
Yeah.
Good morning on Sirius XM as well. Many ways to get us here in your morning commute. Get to the office, get back home after dropping the Rugrats off. It's just simple. We're on YouTube. Subscribe to Bloomberg Podcasts out on YouTube. Speaking of podcasts, YouTube podcast is huge.
I know.
I had no idea.
It's a biz.
Futures up 20 from New York City. Retail sales next. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Lisa Mateo. We are just moments away from retail sales for August. Ahead of it, let's check in with futures. Right now, we have NASDAQ futures up 0.5%, 113 points. Dow futures up 0.2%, 113 points. And then we have S&P futures up about 0.3%, or 22 points. All right, the numbers are starting to come in. Let's start with retail sales. Let's see, the survey was for a drop about 0.2%, came in at 0.1%. The prior was for 1%. Then we get you take autos out of the picture for August. The survey was for 0.2%, came in at 0.1%. And you would take autos and gas out of the picture. The survey was for 0.3%, came in at 0.2%. That prior was for about 0.4%. Let's see a change in the markets. NASDAQ futures, well, still up about 0.6%. Dow futures up 0.3%. S&P futures up about 0.3% as well. We're not done yet. 9:15, we get that read on industrial production for August. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, you nailed that. I couldn't have done that. All those 0.1%.
Forget it.
I would have just said, geez, it pretty much came in on survey, market churning, sort of blinking, waiting for 9:15 when we do get that important industrial production in CAPU. I love saying that, CAPU.
Yeah, that sounds good.
None of you in the room know what CAPU is. It was from another time and place where Albert Sloan and GM meant something long ago, the Minnesota Mining and Manufacturing Company. Our economic indicators, they're always brought to you by Commonwealth. Join over 2,000 independent financial advisors. They are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Thank you, Commonwealth, for your foundational support of economics. This is what the show's about. You get Darda on, and to follow it up with Ben Emmons is what we're about. Ben Emmons, for years at PIMCO, founder of FedWatch Advisors, and acclaimed for writing dense, short, I hate you notes, because you have to read the whole thing. What's the heart of the note you're going to publish tonight before this madness?
I call it Fed fever. You know, there's a fever pitch around the Fed, right? Lots of uncertainty of will they cut by 25 or 50, and it reminds me a lot of what happened in 2015 when we had the similar sort of uncertainty about the Fed hiking rates and by how much. And again, to our earlier discussion, Tom, it's a communication. Right? It's about a Fed that still sits in the pandemic and having to deal with these numbers. Like if you look at retail sales, actually revised a little bit up.
Come on, Ben. I mean, look, when you were at PIMCO, you owned the analysis of communication.
Yeah.
It's just simple. There's too much. To me, it's out of control. Is that what the price of too much communication is, the madness that we see Wednesday?
Yeah, exactly. And that's actually the reason why I started as FedWatch Advisors, like filtering the noise of the Fed, because there is too much noise and there are then too many opinions about the direction to take. Why you're seeing that there are gyrations in markets. And if you think of interest rates, right, the yield curve is a little bit disinverted, but it's actually very flat. You know, most of the yields are the same, which, you know, tells you there's uncertainty. Markets don't actually know the direction of interest rates. And that is a challenge because, you know, we've had episodes in the past before, like the taper tantrum, that didn't happen without coincidence because of communication challenges. So that will happen again. At some point, we're going to get another jolt in rates or another way around, because the Fed seems to be in a point where the data points matter more than the actual total data, even though they say they're data dependent. And I think there's just too much of a sort of coalescing around a consensus while nobody's actually really agreeing with that consensus.
Right. Paul, I cut a major slack because all the talking heads have never had to deal with a pandemic.
Right. Yeah.
I'm still Richard Timberlake, McTeer, the Dallas, Georgia school. You know what? Everybody puts their pants on one leg at a time.
Yep.
And the answer is, out of a pandemic, they were guessing the whole way.
Exactly. Ben, so when the Fed does begin cutting rates, how aggressively will they go over the next 4, 5, 6 meetings? How do you think that's going to go?
So there's two ways to think about it, Paul. So on the one hand, if you look at the Fed funds rate accounted for inflation, and you look at what happened just this year, that real Fed funds rate went up over 100 basis points. And so that's a lot of tightening. And if you then add into what the balance sheet, there's an implied rate from that too, there's another additional tightening. So there's actually room for the Fed to remove that.
Mm-hmm.
And then the question is indeed how quick, and how quickly you're going to get to neutral. That's, I think, the other question.
Yep.
Markets seem to be pricing in this neutral rate in a sort of a 3.5% range, and it's right where the yield curve currently is or about, which is at the upper end of that range. But that's a lot of distance from where the Fed funds rate is itself. So should the Fed move really quick, based on data coming in this morning, they'll say no, right? I mean, it's still very like a reasonable economy that's maybe still trending above the potential rate, and therefore let's not throw too much gas on there by cutting rates too quickly, because that's not necessary. But the signals out of the labor market does show that the real funds rate has had an impact. And one thing I do think there's an urgency within them, judging it particularly from speeches like Waller, like we cannot really fall behind the labor curve, so to speak, as say. Like if you let the unemployment rate rise, it's not going to stop. And so to not fall behind that curve, you're going to have to move faster. So I'm of the view that the Fed has room to cut because of that real Fed funds rate tightening and balance sheet tightening. And the numbers do not speak to a risk of immediately resurgence of inflation. So I would be of the camp saying you should go with 50 basis points tomorrow. You have that room. Why wouldn't you do that? Yeah.
All right. And then, I mean, the question I think for the Fed is, are they too late a little bit? I mean, let's think just about the labor market. Do they want to, we've got 4.2, 4.3% unemployment. Is that kind of where they want it, or are they going to let it drift even higher, do you think?
I think that's what they don't want to do. They don't want to let it drift higher. And so I would not be surprised that if they go for 25, a lot of people expect that the minutes will show that they have, kind of intense debate, that there's a lot of people there in the room that would say, no, we should do more. Maybe not a recognition that they already should have cut before. Right? Now, that's the behind-the-curve argument, right? And they obviously will never say that they're behind the curve, but I do think that they realize that they're right at the cusp of it by not acting at all. If they were not to cut rates tomorrow, that would be, I think, a significant negative event for markets.
But a few years back at the University of Amsterdam, you figured out what I figured out. This is just physics envy. It's just Newtonian plug and chug. And on a basic Taylor rule, there's not one, there's two, you could even say there's three plugins, Oken factor, Nehru, and the rest. The bottom line is those plugins in their mathematics is, Arian would say, are unknown unknowns now. They don't know the neutral rate. They don't know Nehru. It's a jacket, Paul. They don't know Nehru. Okay. They don't know Oken's rule. I mean, to me, the unknown unknowns here are tangible.
Yeah, and I think the Taylor rule, interestingly, now pricing in this much lower rate path, as before was always much higher. It does suggest, right, like these unknown unknowns give them this fan chart of like, where's this rate really going to have to land to have some sort of equilibrium. So it remains, on the one hand, a mechanical theoretical exercise. On the other hand, it's just by business, right? As in, I think one thing, Tom, I thought was always really telling from Bostic, who's somewhat more of a business-oriented Fed member. They did this survey in their area, and they heard from all these businesses, like, if the Fed's going to cut rates, I expect sales to go up. I'm going to hire people. I'm going to invest. So there's something about the economy at this point maybe that could trigger activity as they cut rates, as opposed to cutting rates for actual weakness, right? So I think that's what the Taylor rule is not reflecting.
Yeah, Paul, get one more in here.
So I guess, Ben, what do you want to hear from the Fed tomorrow, just in terms of rhetoric from Jay Powell?
Well, the guidance is important.
Good question.
I've said that before, that we're lacking guidance, right? There is uncertainty. They say they give us some guidance, but actually not. Maybe not the explicit guidance what you saw back in post-financial crisis, but they kind of give us a real clear sense of the path where we're heading, and what they really consider to be the short-term neutral rate, where they feel that, at a, let's say, 3.5% funds rate, things are really in balance, right, so to speak. That I think is really important to bring that message out. And Powell, being pragmatic as he is, may
I'll go with that.
Right, he may hint at it, right? So,
Okay.
Yeah.
When are you going to write your memo today? I mean,
So I had it almost finished before I came here. I couldn't make it on time because I wanted to jump on the W train to get here. But it's going to come out in an hour or so.
Ben Emmons, thank you so much. We'll
you.
look for that. We protect the copyright of all of our guests. Look for that from Mr. Emmons and Fed Watch. advisors. Right now, futures up 23. Bloomberg Surveillance. We're brought to you by IBKR with Interactive Brokers Forecast Trader. You can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Hip-hop mogul Sean Diddy Combs arrested by federal agents last night based on a sealed indictment filed by the U.S. Attorney's Office in Manhattan. Manhattan U.S. Attorney Damian Williams said in a statement, "We expect to move to unseal the indictment this morning, and we will have more to say at that time." An attorney for Combs said in a separate statement that his client is innocent, and he looks forward to clearing his name. Combs will be in a Manhattan federal court later this morning. He has been accused of sexual abuse several times over the years. Officials say that the suspected gunman in the apparent assassination attempt on former President Donald Trump was never able to see his possible target. The Secret Service spotted a man with a rifle as Trump played golf in Florida, opening fire before the suspect escaped. Ryan Wesley Routh was arrested about 50 miles away from the golf course. Meanwhile, Trump is talking about what happened Sunday. Trump on X Spaces said he needs more people on his security detail.
It was quite something, but it worked out well, and Secret Service did an excellent job. And they have the man behind bars, and hopefully he's going to be there for a long time. Dangerous person.
Trump also suggested he survived because God wants him to be president. Ohio Governor Mike DeWine says the town of Springfield has been the target of nearly 36 hoax bomb threats since last week's presidential debate. The city has been the focus of debunked rumors regarding the city's Haitian immigrants. Former President Trump and other Republicans have repeatedly said the migrants are eating neighbors' pets. DeWine says as a result, schools in Springfield will have more police officers beginning today.
Our children deserve to be in school. Parents deserve to feel that their children are being educated and that their children are safe.
Governor DeWine also says they put up cameras in front of City Hall and the high school grounds as well. Global news 24 hours a day, whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Okay, the Washington Nationals play the Mets tonight. I mean, you know, the Mets are supposed to win that game. I mean, it's all they're, you know.
They're winning everything.
With the excitement of what's going on. But we got some major matches going on here. Minnesota against the Clevelands. And the I don't call them the Guardians. No, the Clevelands. The Clevelands. You know, Minnesota's playing the Clevelands. That's tough. Come on. Detroit, Kansas City. This is like the game of the year.
Listen, Detroit is, if you take about a 20-game snapshot, Detroit's playing the best ball right now.
They are.
And we are a game and a half out from making it into the wild card.
And they're winning ugly.
When did that happen?
Yeah.
They're 5 over 500.
Well, that's what I'm saying.
I didn't know that.
You know, but they've been winning ugly.
All right.
And they're going to go in ugly, and they're going to probably face the dreaded Yankees, and, you know, it'll be fun.
That's the way I follow life. I go in ugly.
Yeah, you go in ugly. You know, I mean, we all have to, except Lisa. Lisa goes in beautiful.
Yep.
It's exciting,
All right,
folks.
Detroit Tigers.
I agree with you,
that.
Michael. You told me like a year ago you think the whole wild card thing's contrived. I agree.
Yeah,
but it's fun at the same time.
It's fun to watch, but
Yeah.
I'm old school. I'm not a fan of it, but I'm biting myself.
Are we still doing the 3 out of 5 thing? Like the wild cards play, and then it's a short. It's not 4 out of 7.
No, and I'm not even sure if it's 3 out of 5 because you got that first series. It might be 2 out of 3, and then you go to the bigger series. Yeah.
Okay, 2 out of 3. Thank you,
Ari.
Ari.
Yep.
Thank you.
Somebody's paying attention.
2 out of 3.
Yeah.
It's exciting. And the Mets, the Mets were in last place until they traded for Scott Havens. That's all there is to it.
Is that it? That's
the
term?
They traded for Scott Havens, and he made the food better, and the stadium got better, and the team got better. That's all there is
Great ballpark.
to it. Futures up 19. They come back a little bit off retail sales. We're up 22, 23. Now up 19 on futures. The VIX 17.14. The 2-year yield, a little bit elevated here with a 3.60. From New York City across the nation, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, well, still advancing. This is after U.S. retail sales unexpectedly rose in August. Now it increased 0.1% after an upwardly revised 1.1% gain. Now, when you take autos, gas out of the picture, sales advanced for a fourth month. Now, in just under a half hour from now, we'll get a read on industrial production for August. Also, some news about U.S. property insurance rates. Property market report, it shows rates fell for the first time in almost 7 years. Insurers, well, they just returned to profitability with lower losses tied to catastrophes. Right now, NASDAQ futures up 0.6%. We have Dow futures up 0.2%, S&P futures up 0.3%. The yield on the 2-year, 3.59%. That's up 4 basis points. And the yield on the 10-year, 3.63%. And that is up about 1 basis point. Two commodities, we have spot gold lower, $2,574 an ounce. We have Brent crude, $72 a barrel. WTI crude, $69 a barrel. Stocks on the move, software maker AppLovin up more than 2%. It got an upgrade to buy at UBS. And then Solar Edge Technologies down more than 5%. Jefferies cuts to underperform. They pointed to some headwinds in Europe. And Viasat down 2%. JP Morgan cut its recommendation to neutral. That's because United Airlines chose to partner with Elon Musk's Starlink instead to power those in-flight Wi-Fi connections. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. What we're trying to do with surveillance here as we dash to the election. Paul, do you realize how soon the election is?
Right around the corner.
I'm still not there.
Nope.
It's like nuts.
Yep.
So what we're trying to do is surveillance election 2024. I said vote early, vote often, but I got out. That
was probably
they
taken
said,
already.
You can't do that. So what we're trying to do here, folks, is talk to adults in political coverage about the stories away from what the two presidential candidates are doing. Hugely qualified, a deputy managing editor in Washington, Michael Shepard, for years at the Washington Post, and came over to really solidify and strengthen with Margaret. Margaret's our bureau chief there. She doesn't have a last name. It's just Margaret.
Yeah, we know who it is.
She's that large. Mike Shepard joins us right now. Mike, what's the level of panic inside the Beltway over gridlock the first Wednesday of November?
Well, that's a great question, Tom, because gridlock is sort of a way of life here, and it won't be something that would change overnight. It's something we have lived with. Any big changes that we want to see, to tax policy, to immigration law, whatever else, it always gets hung up in Congress. That will be a fact before the election, and it will be a fact after the election, and even after a new president and new Congress are installed in January. So the level of panic is more maybe a level of resignation, but there is concern over the possibility of turmoil surrounding the election and whether the election will be decided, definitively.
Okay, well, let's rip up the script here, Paul. I mean, this is too much. Are you telling me, Mike Shepard, that Wednesday morning we may not know who won?
Well, if you recall 4 years ago, Tom, it was up in the air, and it really took some time to sort out all those remaining swing states. And, there were disputes that the then president, Donald Trump, and his supporters waged across the country in courts seeking to get ballots voided. And he was pressing officials, including in Georgia, to try to find more votes that obviously weren't there. So we could see days, if not more than a week, of uncertainty about the final result, unless it is really super decisive, including in those battleground states.
Hey, Mike, what's the feeling in D.C. with the type of campaign that Vice President Harris is running here? What's the feeling about how effective this campaign is or is not?
Well, what they're feeling among Democrats, at least, is a greater sense of reassurance. They're sensing more energy from the vice president as she gets out there on the trail. They feel that she acquitted herself very capably during the Democratic National Convention. She was able to effectively introduce herself to a country that doesn't know her nearly as well as former President Donald Trump and certainly her boss, President Joe Biden. And then more recently, during last week's debate against Trump, Harris performed well, and that seemed to satisfy a lot of concerns about how she would do as an untested top-of-the-ticket candidate.
I'm going to cut to the chase, Michael. Is the vice presidential debate a non-event?
I'm glad you asked that, Tom, because I was just talking about this upstairs with our managing editor overseeing U.S. political coverage. And
Who's
with
that?
the race
Wait,
so
who's
close,
that?
it's Mario Parker. And
you get to go in Mario Parker's office? I've never been in that office. It's like it's the view of the mall from Mario Parker's office.
Well,
It's
I'll tell you,
unreal.
Tom, we were actually in the pantry, getting our coffee, talking about it.
Okay,
But,
I got to interrupt. Folks,
but,
Tokyo used to have the best food at Bloomberg. Washington, D.C. has the best food court in all of Bloomberg. Michael, continue on you and Mario on what we're going to see October 1.
Well, what we were discussing is whether this debate between Tim Walz, the running mate of Kamala Harris, and J.D. Vance, the Ohio senator that Donald Trump picked, will it be more significant than some of the vice presidential debates we have seen and promptly forgotten about over the years? And our sense is that this could be more significant in a race that's very close and involves two senators from states that are considered very close competitions, Ohio and Minnesota.
Michael, thank you so much. Michael Shepard, regards to Mario. So best food, absolute best food. Michael Shepard, our deputy managing editor. You go in, and there's like protein.
Yep.
And peeled hard-boiled eggs.
There you go.
You can get tuna and soup, and everything's like Lisa Mateo, healthy.
Yeah. There's no Doritos
They
there.
have Cheez-It. They have Cheez-Its.
Do they? Okay.
Oh,
Cheez-Its.
that's a mandate from
must,
the
okay.
company worldwide. Michael Shepard, and this, folks, seriously, with Mario Parker, the grind of what we're doing to the election. Of course, our leadership is David Gura, and look to balance of power, Joe Matthew and Katie Lyons ramping it up for the election as well. Paul, what do you see on the screen?
I got a little bit of a lift here. Yeah, a little bit of a lift here, Tom, on the back of that retail sales data, a little better than expected, as Lisa's been reporting. S&P.
So that's 25 beeps.
Yep.
Is that the summary? It tilts to 25 beeps now.
It could be. I think that's. Boy, it feels like you can make an argument for either right now. So that's going to make tomorrow's reporting that you guys will have starting 1:30 p.m. Wall Street time. Michael McKee down in Washington D.C. He'll be asking his annoying question, I'm sure, of the Federal Reserve, trying to get a sense of what's happening. But again, we have a lift here. S&P up 0.4%, the Nasdaq up 0.6%.
It's just I don't know what to make of it, folks. Other than I would suggest I go back to this is Neil Sass from Credit Suisse, ran all their research, just huge supporter of the show way back in the early days, and nobody knew what we were doing. They still don't know what we're doing, but Dr. Sass gave us a lot of support, and he would emphasize the behavioral asymmetry. And Paul, this is a word you don't hear enough: worry, among fancy economists, in that what's my least risky outcome? And of 50-25, without question, their least risky outcome is 25. Because if it goes one way or the other, they can go 50 beeps at the next meeting.
They can here. And so then you've also got an election here, Tom. I'm not sure how that factors into their calculus about timing, September versus something closer to the election. I don't know. But again, they've got lots of data from which to make their decision here. And again, the market got just over the last 10 days, got, I think, more comfortable with a 50 basis point cut.
John and I used to bust chops about a snooze fest. This is as far from a snooze fest as we've ever been.
No, absolutely.
I believe scheduled to be with us for the Fed decides a generous amount of time with Mohammed El-Arian.
Ooh, that's a solid.
Our foundation
very good.
Guest across all of our discussions. There's the same old Diane Swank, I believe, scheduled
Another
to
great
be
one.
with us. Diane Swank out on LinkedIn, folks. I really can't say enough. Some of the people out on LinkedIn, our guests on Twitter, really writing smart notes, but recently I would say it's tilted more towards LinkedIn. Really, really valuable notes to help you frame out your belief in the markets. Paul, look at the levels, 57.22.
I like that.
42,181 on Dow. And the NASDAQ, 19,700.
20,000 watch on there.
We're going to ramble on into 2025.
I see what you did there.
Liz Ann Saunders people called up today. one of her interns. She's like 3 interns in September.
Happy birthday to
They
Lizanne.
said play lead. Happy birthday, Lizanne.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Good morning from our flagship studio, our world headquarters in New York, Lexington Avenue and 59th Street.
Yep.
You know, it's great. We're right next door to Bloomingdale's.
Yep.
You know,
I would call this an A-plus building. That's what the real estate people say. If you're
It
in
is.
an A building, you're in good shape valuation-wise. If you're in B and C, it gets a little dicey there.
It is, and we have made, Bloomberg has made a real commitment to Manhattan. We've signed a lease that goes out 100 or 200 years here at
Same in London.
731 Lex.
I mean, we doubled down. Mike doubled down in London, coming out of that great financial crisis. We're here. We're not going anywhere.
Good morning to Queen Victoria Street in London.
Love it.
Other efforts that we're doing in Singapore and particularly in Dubai. There's a beautiful, beautiful effort there spearheading our Mideast efforts. Futures spearhead up. We're up 19, now up 25. Lift to the market. NASDAQ up 7/10. We featured the Microsoft dividend increase and share buyback. We've got a really important guest coming up on that here in moments. Stay with us. Retail sales. Paul, what do you think? Like on track and
pretty solid.
Solid.
Yeah.
That's the right word.
Yeah, I know. We hear from the retailers that the lower end of the consumer is struggling, and that's certainly the case. But some of these numbers are okay.
You know, indecision. We go into the Fed day tomorrow. We have more for you. We've got some economic data here in 14 minutes with our Bloomberg Business Flash. Lisa Mateo.
You got it. We've got green on the screen after U.S. retail sales. It posted that surprise gain. That was really thanks to online purchases. 5 of the reports, 13 categories, posted increases, while others like electronics, appliances, clothing, and furniture, that fell. So we have NASDAQ futures up 0.6%, Dow futures up 0.3%, S&P futures up 0.4%. We have the 2-year yield at 3.58%. That's up 2 basis points. The yield on the 10-year 3.63%, and that is up 1 basis point. To commodities, spot gold lower at $2,577 an ounce. Brent crude $72 a barrel. WTI crude $70 a barrel. Shares of Intel up more than 5%. CEO Pat Gelsinger landed Amazon's AWS as a customer for the company's manufacturing business. Now, at the same time, Intel also postponed new factories in Germany and Poland. Now, meanwhile, you have Amazon CEO Andy Jassy. He's ordering workers to return to the office 5 days a week starting in January. Amazon up about 1%. And shares of Microsoft up more than 1%. Boosted its quarterly dividend by 10%. Announced a $60 billion buyback plan. And this headline coming across the terminal. The Department of Justice ramping up criminal probe of banks that were hurt by the Archegos debacle. We'll have more on that. That is a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. This is a joy. She's been right. That helps. But also just a joy to get a holistic view on what you need to do in the market. Barbara Reinhardt joins us. She read Mark Twain at Trinity in Hartford, Connecticut. It was just a sterling career. Credit Suisse private bank as well. But now with Voya Investment Management driving opinion on the market. You've been dead on about U.S.-centric quality. How will you amend that into next year?
Well, thank you, Tom. You know, thinking about the U.S. has still been beating the rest of the world, and it's in part because of things like Microsoft yesterday. U.S. companies have very friendly shareholder practices. And the second fundamental that's underlying U.S. equities has been the earnings picture. So stocks are up about 17% this year on about 8% earnings growth. That sounds about right to us. And I think that the real thing that our team has been thinking about, and we've been researching, has been, are we being compensated to go out to the rest of the world? And even though it looks like the emerging market stocks are cheap, in our opinion, the underlying fundamental picture is still relatively weak.
Damien Cesar with a blistering note this morning saying, with whatever the Fed cut is, EM, stronger currencies, perhaps a lift to EM from young Cesar.
So, Barbara, when you think about the various asset classes out there, what appeals to you right now, assuming we are going to a world where the Fed is easing, the Bank of England is easing, the ECB is easing? Where do you guys look for value these days?
Well, Fed cutting cycles and central bank cutting cycles in general, if they're not behind the curve, which means the economic data is weakening dramatically, tend to be very good for equities. But I would note, we're multi-asset portfolios. It would be shocking, but this is true. Over the past 3 months, TLT, the long-dated Treasury, is up 9%, and the S&P 500 is up just about 1.7. So bonds have been beating stocks handily over that very bumpy summer. We do think once we get closer to the election, after we get through this seasonally weak part for the equity market, we do think equities will be able to find their footing and probably start to beat bonds again.
How much credit risk are you taking at Voya here? Are you just happy to sit in the Treasury curve?
No, we have some very smart researchers, and they helped us buy credit early in 2023 to get the carry because interest rates were so attractive versus underlying treasuries at that time. So we've been sitting in high yield. We're owning carry in our portfolios. No reason to change that at this time. Even down in the diciest parts of the high yield market, like the triple Cs, those spreads are still continuing to tighten. So we think that having carry in the portfolio until you start to see the whites of an eyes of a recession is a very good thing for your total return.
I have tattooed to my brain Robert Kirby, the giant at Capital Guardian Trust years ago, saying, look, all you got to do is beat 200 basis points, 2 full percentage points per year. The fact is SPX large cap, Mag 7, all that idiocy, has beat mid cap by almost 3% per year for the last, it's been a debacle for mid cap. And I'm fascinated by you're starting to look at mid-cap again.
We are.
Why?
So it's our way to what we play the chicken value, right? So
the what?
It's called chicken value. So the reason that we say it's chicken is because it's not going whole hog into value, right? It's not going out and buying.
There, chicken there, whole hog. Should go where's the Barbara's going to go where's the beef in a moment.
I think I regret that statement now. But it's a way to play value, but play it in a little bit of a way that we understand that deep value probably won't work until we're at least closer, even closer to a recession. But we do note that mid-cap has, more financials, more of the value plays. And we think that that's really a good place to look. Also, mid caps will benefit from an easing cycle with the Fed. They don't have a tremendous amount of the leverage that the small caps do. We're not playing down there just yet, but we think mid caps are a good way to say that market's going to go up, and maybe some of the more cyclicals and the more value-y part of the market may do a bit better, and we're playing it down in cap size because that's just been beaten down over the past few years.
So the value is
As Tom pointed out.
multi-asset strategies and solutions. Does that include alternative assets?
It does.
How do you guys or how much do you allocate to alternatives, and how do you allocate?
So in our target date portfolios, which are our retirement plans, so we're predominantly investing to either help people retire better or send kids to college. So we run 529 plans as well.
Okay.
Our alternatives includes things like real estate investment trust, private real estate, and also commodities. You know, we have not been in commodities since 2017. We kicked them out of the portfolio, thought that emerging market growth was going to be very poor. In terms of real estate, we have been out of the REIT market for a number of years now. I know it's moved against us more recently, but we believe over the next 5 years, the S&P will likely beat REITs.
Very good.
So you're still out of the REITs?
We're still out of them, even though they've rallied really smartly off the bottom. It is a huge debate, but we think that it's the third derivative of real estate that's starting to improve, not the second derivative.
Okay.
This is if you go to Trinity, you talk third derivative.
Exactly.
Art's the thing. What about Europe? You got to help me here with Europe if you're with Voya.
So, you know, Europe is a bit of a political quagmire, right? The politics in Germany and the politics in France mean that you're unlikely to get anything accomplished on the legislative front or even on kind of the fiscal front. Why we really thought that Mario Draghi's study of Europe and competitive, so impressive.
Okay, but what's it mean for the Netherlands? ING, Voya, I get it. Can the Netherlands, which, you know, Mr. Rutte would say, we're the ones that are going to be most American, most Anglo-Saxon, whatever you want to call it, can the Netherlands get the American pixie dust?
In a nutshell, we don't think so, in part because part of the EU is for unity, and it's unity, you know, to really stave off the ravages of potential war, right? We're kind of going back to World War I and World War II. They don't have the economic unity that you would like to see in order to implement some of Mr. Draghi's reforms. But boy, we think that it was an impressive look at it, and hopefully it will get implemented at some point, but we just don't see it on the horizon over the next few years.
Don't be a stranger. Barbara Reinhardt, dead on about investment in America with
Thank you,
Voya Investment Management, multi-asset strategies, and the rest. They're really interesting. They're really covering the gamut with Paul talking commodities as well. Reinhardt lifting the market. I mean, she did it single-handedly. Futures up 19. Now futures up 27. 20 minutes to the opening. We've got some production cap use statistics here in 4 minutes as well. NASDAQ up 0.7%. Really want to emphasize the Microsoft news we saw with a 10% dividend lift. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. New body camera video shows the moment officers arrested the 58-year-old man who they say camped out on former President Trump's golf course for 12 hours, part of an alleged assassination attempt. The suspect appeared in court on Monday and currently faces 2 felony gun charges. Meanwhile, Steve Witkoff, Trump's friend, fellow real estate investor and donor, was on the golf course with Trump. He spoke to ABC.
I watched in real time because I never really crouched, and to this moment, I'm not sure why really. It was just I was almost mesmerized by everything that was happening.
And there are questions about whether the Secret Service needs more resources to fully protect Trump. Senate Majority Leader Chuck Schumer.
If the Secret Service is in need of more resources, we are prepared to providing it for them, possibly in the upcoming funding agreement.
Senator Schumer says we all must do our part to ensure that an incident like this does not happen again. Springfield, Ohio is in the spotlight in the race for the White House. It started after former President Trump repeated rumors during the presidential debate last week about the Haitian immigrants legally living in the city are eating people's pets. Since then, businesses, schools, and college campuses have closed down after threats were made. Ohio Governor Mike DeWine.
We've taken action in regard to cameras. We have taken action into putting large number of members of the Highway Patrol here.
Governor DeWine. Meanwhile, in a new twist, the Trump campaign says the former president has offered to campaign there. Meta is banning Russia's state media organizations from its social media company platforms, alleging that the outlets use deceptive tactics to amplify Moscow's propaganda. Meta owns Facebook, WhatsApp, and Instagram. It said in a statement that it will roll out the ban over the next few days. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Okay, this is important. Joe Costanz has this on Amazon's 5-day-a-week. And, you know, I'm really proud. Redo, keeper of the Amex, is like featuring this out on LinkedIn. I'm trying to get to it right now. Here's a quote from Redo, keeper of the Amex. For discussion at your next meeting, Jassy of Amazon called out, quote, pre-meetings for the pre-meetings, for the decision meetings, a longer line of managers feeling like they need to review a topic before it moves forward, owners of initiatives feeling less like they should make recommendations. Decisions will be made elsewhere.
Right. Exactly. I mean, hopefully
Would you like to comment on
thank
that?
you. I don't want to be anywhere near those types of meetings. Thank you very much.
Redo, keeper of the Amex, thank you for that wisdom from the Amazon School of Management. We'll have much more for you. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And futures advancing after U.S. retail sales show resilient household demand midway through the third quarter, even as hiring and wage growth shows signs of moderating. Now, this all comes as the Fed debates on how much to lower interest rates tomorrow. Bond traders favoring bets that the Fed is going to kick off their rate cutting cycle with a half-point move this week. Meantime, industrial production for August rose 0.8% month over month. Forecast was for 0.2%. So we have NASDAQ futures up 0.6%, Dow futures up 0.2%, S&P futures up 0.4%. The 2-year yield at 3.58%. That's up 3 basis points. The yield on the 10-year at 3.63%, and that is up 1 basis point. To currencies, we have the dollar weaker, Japanese yen, euro, British pound weaker. We have Bitcoin up about 2.5% at around 59,000. Companies making news, that's Starbucks. It's looking for a global brand czar. It's going to oversee product marketing, digital store concepts. It also announced its North America CEO Michael Conway will retire spiked higher in November. And sources say UniCredit set to ask the ECB within days for regulatory permission to build a stake of as much as 30% in Commerce Bank. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash.
I can't tell you for global Wall Street what a big deal that is, Lisa, where they want to go after 30% of Commerce Bank. Francine Lacroix will be in New York next week for our UN meetings, and that will be topic one with Francine, with her knowledge, particularly of Italian banking. Futures advance up 25. Joining us now, Steve Sosnick. He's Chief Strategist, Interactive Brokers. I'm so happy you're here because I got a lot of people going 25, 50. I really don't care, but they really ought to go 50. And you're just saying, everybody stop. They're going to go 25. I happen to be in your camp. Nobody cares what I think. Why will they only go 25?
Well, I think. Good morning, Tom. I think I've come to respect the market, and if the market's saying 70% chance of 50, well, probably that's the market is signaled that way. I think 25 is what they should do. Here's my rationale: is this? Is there anything that tells you that money is too tight? As we're sitting here with the S&P in spitting distance of a new high, as bond yields are plunging, as credit is widely available, is there anything in that scenario that says monetary policy really needs to be markedly loosened? Retail sales are a bit better than expected. So you add all this up, and it tells me we don't really need 50. I think if you again, I have to respect the market. Too many years as a market maker makes me realize that, you get crazy fighting the tape. But on the other hand, so 25, I think, would be disastrous at this point for markets. 50, I think at this point, when we've been up how many days in a row now on the S&P 500, maybe it's a buy the rumor, sell the news event, because at this point, that's pretty much priced in too.
And what do you see on your desk? What are your clients doing? What are they buying these days? Are they sticking with? I mean, it seems like it is broadening out.
It is broadening out, but we still see the names that you'd think would be the leadership being the most active names at our firm. It's still it's NVIDIA by a wide margin. It's Tesla. It's AMD. It's anything semiconductor related, and our customers tend to be very active traders. So why buy stocks when you could buy triple levered stocks kind of thing? Why buy the QQQs when you could buy triple Qs? And so we do see a lot of that kind of activity right now.
I mean, to me, it's an asymmetric leap here. They can go 50 now, then 25, or they can go 25 and then 50 if they have to. And the answers are going to keep their powder dry. That's what all central banks have done since Hamilton. I mean, this is before J.P. Morgan. Back to, we had Jeff Ewan from BNY. Back to 1784. They keep their powder dry.
Yeah. That's kind of why I think what they should do is 25. And I think where we're losing sight of things is, they're going to tell us through the dot plot, the SEP, what they intend to do. And does that really is it reasonable to expect that there's going to be 5 rate cuts between now at the 3 meetings that remain through the end of the year? Is it reasonable to assume that there's going to be 5 more rate cuts by the end of 2025? Because that's what's priced in right now.
Yeah. Okay, I got to interrupt. I learn more, Steve, from YouTube live chat than I do from you. Petty goes, why don't they just go 3/8 and keep everybody happy? Do an Arthur Burns, don't go 25, don't go 50, but go 37.5 beeps.
Can you do that?
I think it's a wonderful idea. They can. It's just that would be such an out of left field solution. I think I have no problem with that. I think it would be a brilliant way to split the baby. But I don't know that the Fed is thinking in that terms.
Paul, help me here. This is so silly. I can't.
Well, that's kind of what we do. So all right. So rates are coming down. The cadence and the degree, that's still to be determined. What do you do here? I mean, do I go out and take credit risk? Do I just go long equities? I mean, where do I go here?
Actually, at this point, I've gotten a bit defensive because we're in a situation where you can't fight the tape. So I'm not saying just go shorting stuff here. Yep. But we're in a situation where because the market's broadened out, we had the NDX top out about 6 weeks ago, and let's assume that the S&P 500 is at an all-time high today, tomorrow, something like that. You know when that last happened? November of 21 and January of 22. which 22 was pretty ugly after that. And so we did start to broaden out, which is why the S&P had more momentum than the NASDAQ. So I'm not saying that 2024, 25 becomes a rerun of 2022, but I think what good news is not priced into the market right now. And that's kind of why I think we're set up for a little bit more of a pullback, a sell the news event tomorrow and the coming days.
You're more qualified than anyone we talk to. Just a simple question. What's the exuberance out there? Across the Interactive Brokers desk, how much frenzy is there versus what I'll call speculation based on a shortened time frame, which is part of the game? What's the frenzy out there right now?
What we see is every dip is a buying opportunity. This is I'm speaking on behalf of sort of the activities. Every dip is treated as a buying opportunity. Then, once the dip is clearly a dip and not something worse, it then becomes, let's chase the rally. So basically, there's no reason, there's very little reason not to buy stocks. And we're seeing a lot of activity, as I mentioned, pick the more speculative way to do a trade. If you could do it with regular leverage, why not do it triple levered? Why not use options? We see a lot of options activity, a lot of very short dated options activity, as is prevalent in the market right now, whether it's weekly options for individual stocks or daily expirations for ETFs and indices. And this is why I say there's no real lack of money being put to use for speculative purposes out there, because we see it.
So, I mean, and are you seeing it from your regular customers? Are they trading the way they typically trade? Are they trading differently these days?
That's hard to say, because I honestly don't have a lot of granularity, zero granularity into what the individual customers do. Because for Chinese wall purposes, I'm kept away from that, and that's for our customers' benefit. But what I just see from an aggregated basis is it is highly speculative. When I look at our list of top 25 names, there's almost always some random name I've never heard of, has no options because it's a micro cap.
Lisa's kids. They're on the couch.
Yeah, and it's up 500%, and they all jump in and trade it.
Steve Sosnick, thank you so much. Greatly appreciated. Chief Strategist, Interactive Brokers this morning. The character of the market off retail sales and CapU and production is a lift. Is a general statement. We're up 19 SPX. We're now up 23. I got NASDAQ up 0.6%. Small stocks play. Lori Calvasina 2000, we call that.
Yep.
It's small stocks up almost 1% right now. The VIX hasn't given me any love yet. I'll bet we'll see that on the opening. 17.10 on VIX. Paul, West Texas back above 70.
I saw that.
What about that? 70.22.
Yeah, I know. So we got a little bit of a rally there, coming off the some lows there, but some concerns about demand out there.
Yeah, well, that's the flip side. I mean, the yields are back. 2-year yield was lower, down to a new low. And we've given that back as well. So it's a churn here.
And we'll call it out for Matt Miller. We got Bitcoin up $1,700, just under 60,000 per token, Tom. So there's still time.
We really respect our time. Steve Sosnick's a busy guy, and we get him in here for lucky once a quarter, maybe a little shorter. Ed Hyman is with EvercoreISI, and he and his team, John Golub and company, have made some sea changes. He was with us like 10 days ago, and we got to get him back. Ed Hyman will join us here from EvercoreISI on our soft landing. Really, really valuable. Futures up 22. Across this nation, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So we have some more economic data out this morning before the Fed announces their decision on interest rates tomorrow afternoon. U.S. retail sales, they unexpectedly rose in August, increased 0.1% after an upwardly revised 1.1% gain. Industrial production August rose 0.8% month over month. The forecast was for 0.2%. So let's see how we get things started on a Tuesday. Right now, we'll start with the S&P 500 up 0.3%, 21 points. 5,653. The Dow up 0.1%, 51 points, 41,675. And the Nasdaq up 0.6%, 116 points at 17,705. We have the 2-year yield at 3.59%, up 3 basis points. The yield on the 10-year at 3.63%, and that is little changed. Spot gold, it's lower, $2,575 an ounce. We have Brent crude, $72 a barrel. WTI crude, $70 a barrel. At the open, let's check in with Microsoft. We've been talking about it all morning, up about 1.5%. That is your opening bell report. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. This is what Bloomberg Surveillance is about, advancing the conversation, the quality of the debate today on economics, finance, investment, and all. The only reason it's here is because Texas is number one in the NCAA football ratings.
Yep.
Ed Hyman's having the best September he's ever had. Go get them Longhorns. Yeah. And you got the fighting Texas Aggies coming up here. Right. My father was at A&M, so College Station will do it to you here in a distance. Ed, you are here within your horrifically busy schedule to explain a shift. What did Julian, Emmanuel, and your team at EvercoreISI do to convince you to move to a constructive economic outcome for Mr. Powell?
So I'm a data dog, as you know, and I'd been lugging around a recession forecast for about a year, and my kids were laughing at me. My wife was kidding me about it, and I couldn't take it. And the fourth quarter's coming up, more substantially. Fourth quarter's coming up in a couple of weeks, and it's going to be positive.
Yep.
So I have to change my forecast again to push it out. And anecdotal's coming in pretty strong. Unemployment claims, which is the best government data, has been strong. System's got a lot of liquidity in it, and money's not tight, as you know.
Yep.
And so I decided I should retreat to fight another day.
So if a recession is not in the imminent, future, what should the Fed do tomorrow, do you think?
I don't really care right now.
You don't really care, okay.
I mean, I don't care in the sense that if they don't do 50, I'll be shocked.
Okay.
Because I've been at this so long, and the Fed picks out somebody like Timorous to communicate, frankly, to me and you. This is not a situation where they're peddling their own view. And Timorous has said over and over the Fed is going to do 50. And if they don't do 50, I'm going to have to go back.
We got to stop. This is very important. Nick Timorous, outstanding with the Wall Street Journal, and Colby Smith at the FT. Full disclosure, Colby worked for Surveillance for years. We're really proud of what she's done at the FT. Okay.
Same thing.
Ed, this is really, really important. They've lost control of communication. Now, we had Arthur Burns smoke signals from his pipe. We had Greenspan with we're all on the same page, one line, and we're now where we are for everybody nationwide listening, worldwide listening. What's Ed Hyman's best communication model for our central bank?
Timorous, Nick Timorous.
You think they should be doing it through the media?
That's the way they do it.
I know, but what do you recommend we do to right this?
Not my game. Not my game.
Oh, come on. Should we be more fractious like the Bank of England?
We are what we are. The Bank of England, first the Bundesbank, they would actually try and mislead people.
Fair. I will give you the fair.
It was, oops, you cut and you said you were in the ease, or tighten. And then Volcker was the close to the vest. And then Greenspan came in and introduced the transparency program, which we have today. But, it's going to happen tomorrow.
Right.
And 25 or 50, it's not a killer one way or the other.
So how do you think about this U.S. economy in the context of the global economy? We've heard about the U.S. exceptionalism. Is that something you buy into? Is it new, or is it?
It's not particularly new. I tend to, buy into that story, but there have been plenty of ink spilled on this, that the U.S. really is an exceptional place.
Yep.
And compared to Europe, which is not a particularly high bar.
Right.
And then China, I've almost lost touch with China.
Well, let me go there. In your acclaim note, folks, we protect the copyright of all our guests. To get Ed Hyman and Julian Emanuel's work, go to EvercoreISI. I'm sorry, the second derivative on China isn't pretty. You've got China M2, China bank loans, ugly, ugly, ugly. Do you have a faith that Beijing can clear the market almost in a Hayekian way? They can come in, say, we got this wrong, straighten it out, and rebuild FDI and investment?
Yes, but no, they're not doing it. And so every day, in the past, particularly the past 2 or 3 months, I thought they might come in any day and clear the boards. And I've waited and waited and waited. And we survey 21 companies that have sales in China. And that survey is 29 on a 0 to 100. It's been as high as 79. It's been really strong. And the U.S. survey equivalent is 48. So, 29 is really bad.
Yep. Yet you still see time and time again Elon Musk, Tim Cook making the pilgrimage to China, because no matter what you say, it's still there. It's still big. The middle class presumably is. It's all the arguments that we've heard over the last 20 or 30 years are still true, but the government doesn't seem to be open, I guess, as it used to be.
I'm a big China fan.
Okay.
I'm on the board of the China Institute. I have many friends who are Chinese. I want to encourage U.S.-Chinese relations, but I'm at the end of my rope, and I'm not sure if I'll ever go back.
Wow. And is that simply a reflection of the political environment where
yes,
all you talk about is tariffs here, tariffs there, and then on the other side, President Xi, again,
I'm not sure. I'm not sure they'll let me come back.
Yeah. Okay.
Okay. Ed, we got to finish strong here. We got too much going on. The Dow up 100 points, now up 88 points. The University of Texas is one of the few schools on the planet that actually make money at sports. Football contributes, basketball contributes, baseball pops $6 million a year at the University of Texas.
Everything's bigger in Texas.
Where is your University of Texas right? It's. I've had the privilege of talking to Michael Dell about this. And it just seems like everything's moving in the right direction for the academics, the athletics of the University of Texas. What do you see there right now?
It's a great school, and you should see the truth, and the truth will set you free. Woo! On the tower of the University of Texas. It's just a school that does a great job for kids, and I'm proud to have gone there. Academically, it's really good. The sports
it's really
are good
coming
too.
Together. Like, the only equivalent I can think of is Michigan,
where
they're really doing, their sports and football. The head football coach is making 1/10 of what Ed Hyman's making. That's a problem. But the answer is they're it's like a real deal.
Yeah.
Frankly, like Duke as well. Ed, generous of you to come in again.
My pleasure.
We wanted to get Julian Emanuel, but he was too busy. So we got you instead.
Thank you, Tom.
Thank you, Ed Hyman
Paul.
with EvercoreISI, with a view to move away from economic slowdown to someplace new. We will look for the data and the daily reports from Ed Hyman, Chairman EvercoreISI, as we can. The Dow up 136 points. Nice lift of the market. NASDAQ up 0.6%. The VIX 17.2. It's got a churn feel before that meeting tomorrow. Again, the Fed decides will start, I believe it's at 1:30. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The man suspected in an apparent assassination attempt targeting Donald Trump camped outside a Florida golf course with food and a rifle for nearly 12 hours. That's according to court documents filed Monday. The papers indicated that the suspect was lying in wait for the former president before a Secret Service agent thwarted the potential attack and opened fire. Officials say Ryan Wesley Routh did not fire any shots, never had Trump in his line of sight. The 58-year-old Routh appeared in federal court in West Palm Beach to face firearms charges. Meanwhile, Steve Witkoff, Trump's friend, fellow real estate investor and donor who was on the golf course with Trump on Sunday, spoke.
We're on the 5th green, and I heard the first shot. I was, I don't know, maybe 5 or 10 yards away from him. We were in a tight bunch group. I saw the Secret Service do exactly what they're supposed to do, which was get right on top of the president.
Steve Witkoff spoke to ABC. Sean Diddy Combs is due in a Manhattan court any moment now. The hip-hop mogul was arrested late last night where he faces a sealed criminal indictment. Combs has faced a stream of allegations by women in recent months who accused him of sexual assault. The charges come from an investigation of Combs that was revealed when Homeland Security agents raided his homes in Los Angeles and Miami in March. Combs' lawyer called the prosecution unfair. A new scientific report in The Lancet is warning that millions of people worldwide will die over the next quarter century if there isn't major advancement in antibiotics to stop drug-resistant superbugs. The study's co-author, Kevin Akuda.
Over the next 25 years, we estimate that more than 39 million people will die as a consequence of antibiotic resistance, about 3 deaths every minute.
Author Kevin Ikuda says as superbugs defeat more antibiotics, a lot more of these deaths will be in first world countries like the U.S. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Good morning out on YouTube. Subscribe to Bloomberg Podcast. Paul Sweeney, where are we? I mean, we're like 24 plus 6. We're like 30 hours away from, there's going to be a statement, OMG. Then there's going to be a 20-minute interregnum where McKee's going to tell us what's going on.
Sure.
Then they go in for the press conference. And, the uncertainty here is tangible.
It's tangible. I think, most people, obviously, you're discounting a cut. But when you look at the WIRP function, which tries to get a gauge on when and how much the Fed will cut, the market's pretty aggressive here and thinking about a 50 basis point cut. And again, that's a different narrative than maybe we heard even a week or two ago. So some of the data coming in suggesting they could, in fact, be that aggressive and that they're not going to stop there. That's the other thing we hear from the strategist.
Yeah, that's a really good point. And that with all the narrowness around an hour tomorrow, an hour and a half, the next meeting after that, they're not going to stop there. And you get out to February, March, and April, May of next year. Where are we going to be?
That's right. And, it's they have room to cut, that's for sure. And the question is, where do they want to take this and on what time frame? And I think the market, again, S&P 500 up 18% year to date. That's pricing in, I think, a pretty aggressive Federal Reserve.
I'm feeling comfortable. Triple leverage all cash.
Sure, no problem.
That could evaporate in the next 90 days, but there we are. Dow up 106 points. The VIX 17.22. We're going to call it stasis on the VIX this morning. Oil, again, American oil over $70 a barrel, 70.79. Nice lift to oil. Gold, 26.04 per ounce. On Apple CarPlay, on Android, on Bloomberg Radio, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm Lisa Mateo. We have stocks on the rise after retail sales data released ahead of the Fed's decision on interest rates showed U.S. consumer actually holding up. The S&P 500 gaining for a 7th straight day, up 0.4%, 25 points at 5,658. We have the Dow up 0.3%, 41,763. The Nasdaq up 0.7% at 17,727. The 2-year yield 3.60%. That's up 4 basis points. The yield on the 10-year 3.63%, and that's up 1 basis point. To currencies, a dollar edged higher. We have the Japanese yen, euro, British pound weaker. Bitcoin up more than 2% at around 58,000. Shares of Intel up more than 2% on plans to make a custom artificial intelligence chip for Amazon. We have Amazon up about 2%. We'll check in with NVIDIA. Its shares up about 0.3%. Signs of strong demand for its next generation chips coming from its supply chain in Asia. That is a Bloomberg Business Flash. Tom and Paul.
Lisa, thank you so much. A very important interview for all of America within the election and the distraction of domestic debate versus our foreign policy future. Joumanna Bercetche had a wonderful conversation with the Prime Minister of Iraq, Mohammed, Shia Al-Sudani, on the tensions of Iraq, Iran, and the Middle East. Let's listen.
Our understanding of the situation of the relationship between Iraq and Iran is based on mutual interests and mutual respect. Iran is a neighboring country, and we share 1,400 kilometers, and it's in our interest to have a close relationship, especially that Iran has been supportive of the political process and our efforts in combating terrorism. Of course, Iraq is the only country in the region that has a special relationship between Iran and the United States, and we try through this positive characteristic to help in bringing opinions closer, and we are interested to have stability in the region, away from the Axis policy. We don't want the tense relationships and the stances of other countries of the world to impact the Iraqi situation. This is our diplomatic effort and movement in terms of our bilateral and regional ties.
The Prime Minister of Iraq, Mohammed Shia Al-Sudani there, and the distinction always made within the Levant and over towards Persia is Shia versus Sunni, and it is unusual to have a Shia Prime Minister of Iraq as in Iran versus a Sunni heritage. Joumanna Bercetche joins us now from Dubai. Joumanna, most people across America this morning are unaware that there's a countable 500,000 who lost their lives in the Iraq-Iranian war of the 1980s. How does Iraq and Iran begin to communicate now?
It's such an interesting perspective that you bring in, Tom, and that is true. The war of the 80s, very historical war in the region that probably doesn't get a lot of airtime, but the situation today is very different. Now, you have to remember there are a couple of things that bind Iraq and Iran together. It's starting with religious binds, and you've got to think about the two holiest sites for Shia Islam. That's Najaf and Karbala. They both fall in Iraq. So that is always going to be the case, and that's always going to be that religious draw and that religious tie that brings them together. But increasingly what we are seeing, especially in the last couple of years, is they've got politically a lot closer. I had the opportunity to speak with the Prime Minister over the course of the weekend, and it is worth noting that he does enjoy a parliamentary majority, but the reason he enjoys that parliamentary majority is because he's being given legitimacy by political groups that are closely supported and affiliated to Iran. And so it is very noteworthy that just in the last couple of years, Iraq has fostered much closer political relationships to Iran. Right. And one of the concerns in the region is that there are several non-state actors that are, again, operating within this so-called axis of resistance that have been carrying out attacks either on U.S. targets or Israeli targets.
With your leadership of the conversation in Dubai, how does Sunni Middle East react to a combined Shia Iran and Iraq. How does Saudi Arabia, how does UAE, Kuwait, the rest, out off, frankly, to the west to Morocco, how do they respond to this combination?
So the impression that I got from speaking to the Prime Minister is that they see themselves as somewhat of a mediator. Now, you will remember, again, this went under the radar, but there was somewhat of a mediation that took place between Saudi Arabia and Iran a couple of years ago. And everyone gave China the credit for hosting the talks between the two countries, but of course, one being Sunni and one being Shia. But in reality, it was Iraq operating behind the scenes, going in between the two. Now, you have to remember there's another link between Iraq and Saudi Arabia, and that is, of course, they're the second largest oil producer within OPEC. They're a very important member of OPEC. There's a lot of focus, obviously, within OPEC to support oil prices right now. And so Iraq is pitching itself as a country that can mediate between all countries in the Gulf, and also one that looks to enjoy bilateral security relationships with the U.S. once the full withdrawal of the coalition forces take place.
And to that end, Joumanna, in your interview with the Iraqi PM, he said that U.S. troops are no longer needed following a near defeat of ISIS. What's the latest on that relationship and the troop deployment?
Yeah, so you have to go back all the way to 2014. And remember, back then, ISIS was a very clear and present danger. At one point, ISIS forces were thought to have taken over about 1/3 of the landmass in Iraq and Syria. So 2014 was a very different situation, which meant you had the U.S. alongside coalition forces from all around the world deploy troops into Iraq to defeat the threat of ISIS. You fast forward to today, it's a decade later. And what the Prime Minister was telling me is ISIS is no longer a threat. It's no longer a threat to the state. Yes, there are a few commanders here and there hiding out, to use his language, in caves or in remote villages, but they don't have any political support. They don't have ISIS incubators, and therefore are much less of a risk. The same way they would look at drug smugglers is how they would view ISIS and the ISIS risk. And therefore, in his eyes, there's less of a justification for U.S. troops and U.S. advisors to remain on the ground. Now, he suggested that there have been ongoing discussions with the Biden administration and that an announcement would be coming soon, or at least that is his hope. But in their eyes, there's no need anymore to have that arrangement with the U.S. and with the coalition forces.
Joumanna, thank you so much. Leading our coverage in the Middle East, Horizons, on Bloomberg Television in Dubai, Joumanna Bercetche. An important, timely conversation with the leadership of Iraq. Paul, I guess tomorrow, is tomorrow like we do the Fed show? The Fed decides at 7 a.m.?
Well, I think we'll do it. You guys are going to have it covered at 1:30 p.m., so I think that'll be good. But we'll be all over that.
I mean, the press conference, particularly after what we saw last time around.
Yeah.
I mean, he was almost, giddy. Is that too much of a word?
They were definitely saying, hey, we're changing our posture here, and that came through loud and clear. And now the question will be, I think, kind of defending or supporting whatever decision they do make tomorrow, because it seems like the market's kind of split between 25 basis points and 50. What does the market really need? What kind of message do you want to send? All those kinds of things.
They don't get economic data before the meeting tomorrow. They get housing starts, building permits. That doesn't count. I don't. Interesting. What a great list of conversations today. Thank you, Ed Hyman, for coming in. Really appreciate that. It's great to see Geoff Yu.
Yes.
Coming in from BNY.
Sure.
In the studio.
Geoff Yu. Yep, absolutely.
Michael Darter with a generous half hour with us. And I thought Barbara Reinhardt was great, reaffirming, buy U.S., buy quality.
Yep.
And that's sort of the theme it's out there. One of the themes, it'll be fascinating to see where this is over the next Q4 into 2005. We've underplayed it. We got to get Gartman on here. 2602.
2602. Oh, yes.
And I just think, that's not a small matter, to say the least. We've seen a real lift in gold. We've not, James Steele was great on that with HSBC. Thank you for coming in. But there's a number of different, ideas going on. Liz Ann Saunders on the equity markets.
Happy birthday.
Happy birthday. And she said she wouldn't come on today unless we did all lead.
So we did.
All lead. Stay with us, please. Bloomberg Radio Worldwide.